Well, hello guys. Welcome to the last session on corporate accounting. Yes, we've officially completed the syllabus today. So let's get the feel of examination questions. Normally, how the questions do come in exams. So we'll try to understand that by solving December 2019 wala paper. Okay. So to just before we start, anyway, few basic rules. Anyway, we can discuss. That is, this examination will be for about 3 hours. And you'll have about 100 questions. Each question will carry about 1 marker. 60 marks will be from corporate accounting, meaning accounting side. Another 40 marks will be from your costing and valuation side. We will be covering only the corporate accounting or the account side of things in the today's session as such. All right. So let's get started. Okay, question number 1. Mines as an asset is an example of what? What do we call mines as? If you have any coal mine, gold mine, what are those assets known as? Those assets are known as wasting assets. In this question, our institute had made a spelling mistake. Actually, it should be wasting assets. These assets are known as wasting assets. By mistake, they call it as vesting assets. So ideally, institute should give marks for everybody on this because there is a spelling mistake here. Because even the vesting has a meaning. Shares, if you offer shares to the employee, we call that as shares are getting vested. So even vested has a meaning, wasted has a different meaning. All right. So ideally, institute should have given the marks. Let's see what happens there. Okay, I know what happened as such. All right. So the right option here is, these are known as wasting assets, meaning those assets whose value decrease over time. If you have a coal mine or a gold mine, as you keep extracting the coal or gold, its value will go on reducing. Yes. So those are known as, those assets whose value reduces with extraction. Those assets are known as wasting assets. So option B, that's the answer for the first question. So second question. At the time of preparation of balance sheet, capital work in progress is shown under what category? Where will you show capital work in progress in balance sheet? First of all, what do we mean by the term capital work in progress? We've already discussed this. We went through the balance sheet in detail. Yes. Capital work in progress means some fixed asset, or now it is known as property, plant and equipment. That fixed asset or property, plant and equipment you are constructing. Meaning, can I call it as PP/property or fixed assets under construction? Like if you are constructing any building or if you are constructing any plant and machinery, those we call it as capital work in progress. Where do you show capital work in progress? Capital work in progress are shown under non-current assets itself. If you remember the balance sheet, under non-current assets, there is a separate category known as capital work in progress. So D as in Delhi should be the right option for that particular question. Next, as per ICAI guidance note, ICAI stands for Institute of Chartered Accountants of India. So ICAI has given a guidance note. They have given various guidance note. Let's see what this question is about. As per ICAI guidance note, at the end of the year, balance in share option outstanding account will be shown under what category? We have discussed this. Yes, same question we have solved also in our class. If you have given shares to the employees, normally shares come with some conditions, correct? Those we call it as vesting conditions. I told vesting period is waiting period, remember? Yes. So till the shares are purchased by the employee, you have to show employee share option outstanding. Where will you show? Under reserves and surplus itself, you will show employee share option outstanding account. So the right option for this is B as in Bengaluru. That's for option number, or question number 3. Question number 4. Okay, let's read this question. This is on forfeiture. If you remember, share forfeiture. First, we'll read the question. We have also put up a chart. And for every chapter, we have put up a chart. I'll show you the chart so that the concepts, you'll be able to recollect it. Then we will do this question. Shiva Limited, the company, they forfeited about 4,500 equity shares of 10 each. What is this 10? It is the face value. 10 is the face value of the share. This company has forfeited about 4,500 equity shares, which were issued on 40% pro rata basis. for a non-payment of allotment at 6 rupees, including a premium of 2.5 rupees. Looks too much bari words they used, correct? No. Okay. One, they used pro rata basis. Pro rata means, when will pro rata come in? Pro rata will come in case of oversubscription. Company wanted to issue 1 lakh shares. Public subscribed for 1.5 lakh shares. So that is a case of oversubscription. In case of oversubscription, the company ka directors have an option to go for pro rata basis. What does that pro rata mean? Pro rata simply means issuing less number of shares. Like if pro rata basis is 2 for 1, that means what? If shareholders or public, if they have applied for 2 shares, then company will allot them only 1 share. This way, the company will be able to allot shares to more number of people. They will give less shares but to more number of people. That concept we call it as pro rata allotment. We have done questions on this also. Yeah. So here normally we have done the question pro rata like this: 2:1, 10:8, 2:7. In all our question like that the sentence was phrased. Here they are saying these shares are issued on pro rata on a 40% basis. What does that mean? Since there are a lot of contents here, we'll read it, and as and when we read, we will jot down a few points first. What does that mean is, we'll just do this column here, applied, allotted. So here they are saying pro rata allotment is done on a 40% basis. That means if you apply for 100 share, if any shareholder, if he applies for 100 share, he will only be allotted 40 shares. Why 40? Because they said 40%. Calculate 100 ka 40%. How much is it? 40. So it should be 100 only here. No, you can assume, you can take any number, sir. If you take it as 10, then this will be 40% of 10, which will be 4. For simplicity, I have taken 100. You can take anything. Is that okay? 40%. Basically, whatever you apply, company will only give, if you apply for 100 shares, the company will give only 40% of that, which will be 40. This is how the company is doing pro rata allotment in this scheme. Okay, so pro rata happened, but some shareholder, he was like me. Okay, he did not pay, defaulter guy. So hence, what did the company do? They forfeited his shares. How many shares did we forfeit? 4,500 equity shares. Why does the company forfeit the shares? If shareholder has not paid some money, if he has not paid allotment money, first call money, final call money, if any of the installment, or if all of these installments, if the shareholder has not paid to the company, then company will wait for some time. They will follow up and try to collect the money. Still, if the guy is not paying up, the last resort is forfeiture. Forfeiture simply means what? Cancelling the shares of that shareholder. They will cancel his membership and give that shares to somebody else. Yes, that's all. Like that, like you. Now, some of you joined our academy. We are going on asking fees. Fees kodi. Okay, you are not paying only, sir. You paid only. We asked for 10,000, you paid only 2,000. Okay, we are going on following up. Okay, we will wait for some time. After that, what will we do? We'll cancel your admission, your seat, we'll give it to somebody else. Yes, just kidding. Yeah. Alright, that's how forfeiture as such works. So here, why did the forfeiture happen? Because some shareholder did not pay for non-payment of allotment money of 6 rupees. Some shareholders did not pay allotment money of 6 rupees, and this 6 includes a premium. So premium of 2.5. So the company is collecting premium. These shares are issued at premium. In the premium, the company is collecting at allotment stage. How much premium? 2.5. Fine. So the allotment money, the shareholders did not pay. Along with allotment money, they also did not pay first and final call money of 3 rupees. So two things they did not pay: allotment money, first and final call money. Hence, company forfeited 4,500 equity shares. Done. So far good. We are able to decode the things. All right. If the excess money received on application is used for receiving the amount due as a securities premium, what should be credited to share per picture account? Journal entry they're asking. You remember check per picture? If you don't remember, I will show you the chart where we did. Hang on. Chart idya. What is all this they're wondering? You have done all these charts. That's how we covered the syllabus, no? With the help of charts. I'm showing you charts. Okay, unfortunately, this is not brought in. No problem. You remember the journal entry. What is the journal entry for share forfeiture? Share forfeiture is share capital account will be debited. At what value? Called up value. You will debit securities premium provided the premium money is not recovered. You will credit whatever the money the shareholder has paid. That will be parked in an account known as share forfeiture account. Meaning share forfeiture account will be credited at paid up value. Then you will credit calls and arrears or to share allotment or share first and final call depending on what you have opened. Yes, that is the journal entry for forfeiture. We have done all this. They are asking how much will you transfer to share forfeiture accounts. Or just if you've forgotten the concept, share forfeiture, how does it work? Or how does share forfeiture work rather? If the shareholder has paid some money to the company, okay, some money he has paid, some money he has not paid, and company will forfeit his share. If company forfeits any person ka share, then the money paid by that shareholder, the company will not refund. As a penalty, the company will keep the money with itself. These are capital profits, hence it should be transferred to capital reserve. We have done all this, yes. They're asking how much should be transferred to share forfeiture account. That is what they're trying to ask. Okay. So let's decode this. How many shares did we forfeit? 4,500. But hang on. So somebody is already answering. 15,750. Vineet is in like full josh. Unfortunately, answer is wrong, sir. Okay. Good, you're trying. Alright. Let's work it out. No worries. Good, you're trying. You should try. Okay. This is key important. Maybe you missed out on this. Observe this. If you apply for 100 shares, the company is going to allot you how many shares? 40 shares. How many shares did the company forfeit? 4,500. Sir, when will the company forfeit anybody's shares? Only after allotment, correct? No? Only when the company allots shares to somebody, then only you can cancel it. Before allotment, can we cancel? Not possible. That means what is this 4,500? This is shares allotted. If some particular guy or if one particular guy, if he has been allotted 4,500 shares, then how many shares he has applied for? Because this is a pro rata allotment. Maybe you're missing out on that. Hence you're getting a different answer. Yes. If he has allotted 4,500 shares means how many shares he would have applied. How do you calculate X here mathematically? 100 into 4,500 divided by 40. Calculate Madi. 4,500 into 100 divided by 40. How much are you getting? X is equal to, meaning shares applied will be equal to, X stands for applied shares, which will be 11,000. Namdu ke calculator is showing 11,250 shares. Yes, awesome. You seem to agree with me. Sir, simple. If somebody has applied for 11,250 shares means they should have paid application money. They should have paid application money. So how much is application money received? Can you tell me? Application money received is how much? First, on one share. Okay. Have they given first of all, how much is application money? So there are only 3 stages here. What are the 3 things? Only 3 stages are there here. One is application. Another one is allotment. And here we have first and final call. That means only 3 installments. First and final call. Have they given application money, sir? Check. We read the question. We didn't see anything. Yes, no. But they've given something else. Let's use that information and see if we are able to find out application money. Do you know first of all allotment money? Yes, they said allotment money is 6 rupees. It includes a premium of 2.5. That means can I say, okay, can I write allotment money as 6 rupees? 6 rupees includes premium. That means can I write the breakup as 3.5 plus 2.5? Would that be okay with you? Yes, would that be okay? 3.5 the shareholder will pay towards face value of the shares. 2.5 rupees is towards premium. Totally he will pay 6 rupees at allotment stage. This is how we used to represent in our class all of the problems also. Looks good, I believe. Okay, check. What is the first and final call money? First and final call money is 3 rupees. Yes, no? Do you know the face value of the share, sir? Yes, face value of the share is 10 rupees. But was these shares given at face value or they gave it at 2.5 rupees premium? They gave 2.5 rupees premium. That means on one share, company is collecting how much from the shareholder? On one share, how much money they are collecting on one share? Face value of 10 plus 2.5 rupees ka premium. So that means that totally they are collecting 12.5 rupees. Correct? 12 and a half rupees is the value the company is expecting each shareholder. On one shareholder, the company is expecting to receive 12 and a half rupees. Is this okay? Yes. Now check. Total value is 12 and a half. In this 12 and a half is 6 rupees is towards allotment means and 3 rupees is towards first and final call means. Balancing will be towards application money, sir. Correct? No. How much is balancing figure? 12 and a half minus 6 minus 3 you do. How much you going to get? That is 3.5. Yes. Only if you take 3.5. 3.5 plus 6 plus 3 if you do, you're going to get 12.5 rupees. One more working note. What is this one more working note? Application money they had not given, which we had to find out. So we can solve all this in 1 minute. Sir, I told you in the examination, some question will be straightforward theory, which you can solve it in 10 to 15 second stops. Some will be little lengthy. Practical questions generally will be on the lengthier side. Fine. That's the reason first priority in examination, always you'll focus towards theory. You'll at least have 30 to 35. Out of the 60 questions, at least 30 to 35 questions will be theory. First answer them off. Okay, you can answer them in easily under 30 to 40 minutes. Remaining, then only start practical questions. Okay, just check. In 3 minutes, in 1 minute, I was able to answer all these 3 above questions. But it's taking me more than 3 minutes just to solve one question. But the hard reality is, these 3 questions carry 3 marks. This question carries only 1 mark. So it is always time versus marks in examination, especially at MCQ level. Hence, first you will always prioritize theory, whichever you can solve sooner. Then you will get to these sort of questions. Okay. Coming back to the concept. You got application money now. I think you forgot the concept only. Yeah. You forfeited some shares. Why did you forfeit? Because some shareholder did not pay allotment money. They did not pay first and final call money. That means what is the only thing they have paid to the company? Application money. And how much is application money? 3.5. How many shares these guys had applied? 11,250 shares. They have applied for 11,250 shares. On this, they have paid application money of 3.5. That means how much is the total money that Rocka we got in? Vitamin M we got is, the company has received is 39,375 rupees. Correct to know. This much they have, the amount company has received from the shareholder. So that means answer is 39,375. Yeah. No. Check the next line first. If the excess money, what excess money? Sir, this is a pro rata allotment. These guys have been allotted only 4,500 shares. But unfortunately, they have applied for 11,250 shares. That means they have paid more application money. Yes, no? Yes, they paid extra application they have done. So that means they paid some excess money. See what are they saying? If excess money received on application, it is used for receiving the amount due as securities premium. So whatever excess money these shareholders have paid, right? That is adjusted against securities premium. Do you have any securities premium here? Yes, 2.5 rupees is a securities premium. Some money they have adjusted towards securities premium, sir. Alright, that means how much do you think is adjusted towards security premium? Adjusted towards securities premium. That's what they're saying. Correct? No. How much is the premium on one share, sir? We already wrote the breakup here. How much is the premium on one share? 2.5 rupees is the premium on one share. How many shares these guys have been allotted? How many shares these guys have been allotted? 4,500 shares. That means how much was up securities premium due on these shares? Security premium due is 4,500 into 2.5, which was 11,250. In this excess, correct, whatever they've paid, whatever money they've paid, first adjust 11,250 towards securities premium. Adjust that. How much is the balance? How much is the balance remaining? Balance is 39,375, correct? Minus 11,250. You do that, how much are you going to get? 39,375 minus 11,250 is 28,125. This only you transfer it to share forfeiture account. This only you transfer it to share forfeiture account. That is what they asked in the question. How much will you transfer to share forfeiture account? The right answer should be Bengaluru B, 28,125. So why can't I take 39,375? Sir, I have clearly told you. Share forfeiture account is a penalty. The company is keeping that money with themselves. This is a capital profit. After share forfeiture, the company will reissue. Once the company reissues them, any balance in share forfeiture account, where will you transfer that? It is a capital profit which will be transferred to capital reserve. But security premium, if there is any premium that you have received on shares, will you transfer that to capital reserve or will you transfer that to securities premium? You have to transfer that to securities premium. Hence, whatever is the premium due, first adjust from this. Only balance you transfer it to share forfeiture account. That is the funda. Okay, little tricky question. But yes, you can expect whenever there is a practical question, you could expect it to be a little tougher. Okay. But yes, with practice, you will get it. And these sort of questions we have solved. Yes, more or less. This is question 4. The answer is Bengaluru. Question number 5. Let's go ahead and solve this. Another forfeiture question they have asked. And this video will be uploading it on the YouTube and also we will be uploading on our app. So you can copy it as well therefrom. Okay, and also this file I will share it with you. So just try to focus your attention here. Okay, just to get your understanding as to how examination questions could come. Don't worry about the writing and all that stuff. If you're writing parallelly, that is awesome. Alright, otherwise I'll share this file with you. So you don't have to worry about that as such. Okay, next one. P Limited, another forfeiture question. They forfeited this time 5,000 equity shares of rupees 10 each. What is this 10? Face value of the share. The company has forfeited about 5,000 equity shares. Each share ka face value is about 10 rupees. And why did they forfeit? For non-payment of first and final call of 2.5 rupees per share. Some shareholder, rather on these 5,000 shares, few guys or one guy, he did not pay first and final call money of 2.5 rupees. Hence, the company forfeited, meaning cancelled his membership, and they will allot these shares, these 5,000 shares to somebody else. They'll reissue these shares to somebody else. Let's see what happened. Okay, of 2.5 per share, which were issued at a premium of 3 per share. These shares were originally given at 3 rupees premium. That means what is the issue price of these shares? Face value is 10. These shares were given at a premium of 3 rupees. That means IP as an issue price is about 13. 10 plus 3, which is 13 rupees per equity share. On every share, company is expecting to receive 13 rupees. Alright, and the premium they are collecting at allotment stage. This is generally the case. Normally, companies collect the premium at allotment stage itself. Now, these words are important. Out of these means out of these 5,000 equity shares, 3,200 equity shares are reissued. Just now told, after forfeiting, the company will reissue these shares to somebody else. So the company forfeited 5,000 equity shares, but did they reissue all these 5,000 or they forfeited 5,000 shares? Did they reissue all 5,000 shares? No. They reissued only 3,200 equity shares. And at what price? At 8 rupees per share. Face value of these shares are 10. And they were reissued only at 8 rupees. Okay. As fully paid up. Okay. The amount transferred to capital reserve will be how much? So forfeiture ka simple funda is shareholder has not paid some money. Some he has paid, some he has not paid. Because few things he did not pay, company forfeited his shares. Whatever money he paid, the defaulter shareholder paid it to the company, we will park in a separate account known as share forfeiture account. Yes. Once we reissue all those forfeited shares from share forfeiture account, the amount will be transferred to capital reserve. We have, if you remember this question, same, these sort of many questions we have done like this. One we have done using journal entry approach. Then I told you don't use journal entry approach for your examination. It will be too lengthy. And I gave you a small formula approach. Yes, that was a lot easier. I will use that. I'll reiterate that again for you here. What is the first thing we'll write here? We need to find out how much the amount needs to be transferred to capital reserve. Simple funda to get that is within 10 seconds you can get the answer. First one, what do you need to find out? Find out the gain per share. First, we need to find something known as gain per share. Gain means what? The amount paid by the defaulter shareholder. Because company is not going to refund him the money. The company is going to keep that money with himself, with itself. So that becomes gain for the company. So we don't require total gain, sir. We want gain per share. Check. What is the face value of the share? Face value of the share was 10. Why did we forfeit these guy ka shares? Because he did not pay final call money of 2.5. Sir, why should we not consider premium? Sir, premium will not be transferred to capital reserve. Premium will go to securities premium. So whenever you're doing this method, don't worry about premium. Always take the face value. Face value of the share is 10 rupees. Why did we forfeit? Because the guy did not pay 2.5 rupees. In 10 rupees, if he has not paid 2.5 means 7.5 rupees per share he has paid. 7.5 rupees he has paid. That becomes gain for the company. Whatever the money the shareholder has paid, company is not going to refund. So it becomes gain per share. Yes, this is the first step. Second step is to find out loss per share. Second step is to find out loss per share. After forfeiting, what did the company do? They reissued. What is the face value of the share again? 10 rupees. At what price did they reissue? 8 rupees per share. 10 rupee worth of share company reissued at 8 rupees. That means did company make any loss? Yes. How much loss on one share? 2 rupees is the loss on one share. 7.5 rupees is the gain. 2 rupees is the loss. Can you tell me what is the net gain, sir? What is the net gain per share? Net gain per share is from this 7.5 deduct to 2. You're going to get how much? 5.5. 5.5. Fourth point. How many shares were reissued? Or we'll write this also, no problem. Number of shares reissued. How many shares did the company reissue? How many shares did the company reissue? They forfeited 5,000 shares. Did they reissue all 5,000 shares? No. They reissued only 3,200 equity shares. That means last step, here I'll write, point number 5. Amount to be transferred to capital reserve. Amount to capital reserve. Amount to capital reserve is nothing but net gain per share. How much is net gain per share? 5.5. So on gain on one share is 5.5. How many shares did the company reissue? 3,200. So 3,200 multiplied by 5.5 you do. How much you going to get? 17,600. This is the answer. In your PUC and all, you used to do proportionate method. That is lengthy. This is, you can get the answer in less than a minute. In fact, all this I wrote just to give you a recap. You don't have to write any of this. You can directly calculate this value in calculator if you apply this method. Fine, we have done many problems like this. Repetitive, that's it. So the answer is D, Delhi. 17,600 should be the answer for question number 5. Alright. Next, question number 6. This is again just a little tricky question. You got to bear with me on this. Okay. C invited applications for the issue of 20 lakh equity shares. One particular company, they want to roll out 20 lakh equity shares. It is not rupees 20 lakh, guys. It is 20 lakh equity shares. Meaning the company wants to issue 20 lakh equity shares. Each is having a face value of 10 rupees. Okay. In this 10 rupees, the company is collecting the money at various stages. At application stage, they are collecting 3. 7 rupees they are collecting at allotment. Only 2 stages. Application 3 bucks, allotment 7 bucks. So totally 10 rupees per share they are collecting in 2 installments basically. Applications were received for 35 lakh equity shares. Abba, such a favorite company this is. See, company wanted to issue only 20 lakh. But people are so enthusiastic, like Rajnikant movie. First day, first show this has become. 20 lakh they wanted to give. But 35 lakh people or applications were received for 35 lakh equity shares. That means again a case of what? This scenario we call it as what? Oversubscription. So in case of oversubscription, directors can either reject the excess application money or they can go for pro rata allotment. Yes, those are the few options available with the directors. Let us see what the company wants to do here. Applications for 7 lakh shares were rejected. They said 7 lakh. Whichever guys applied for 7 lakh shares, they said tata bye bye. They showed them the boots. They say better luck next time. No ticket. Come next time, they rejected his application. Meaning whatever application money they had paid, company refunded. On how many shares? 7 lakh. Okay. And they went for pro rata allotment was made to the remaining applicants. What is the total applicants, sir? 35. In 35 lakh application में से 7 lakh applications टाटा bye bye, no share, rejected. That means how much remains? 35 lakh में से 7 lakh gone means कितना बचेगा? 35 minus 7 will be 28 lakhs. On 28 lakhs, perfect. The company is doing pro rata allotment. Yes. Let's see what they're asking. X is application money. If you're doing pro rata allotment, yes, there will be extra money because shareholders would have applied for many shares. They would have got allotted less number of shares. So that excess money, whenever company does pro rata allotment, will the company refund that excess money? No. They're going to keep that with themselves. That money they're going to adjust it next. After application allotment will come. No? So this excess application money will not be refunded. They will adjust it with allotment. After adjusting allotment also, if excess money is there means, they will adjust it with first call. Even after that means final call. Even after that means very, very rare scenario. Then they will refund. So much it will not be. Okay. Yes. So that is the process of pro rata allotment as such. So here they are saying excess application money was adjusted on the sums due on allotment. Application money, they have adjusted at allotment stage. They are saying awesome. Now here is the most important one. Mr. Ravi could not pay allotment money on his allotted 2,500 shares. The keyword is not applied, guys. Whenever pro rata allotment comes, read the question very carefully. Whether it is allotted, applied, makes a huge difference. Okay. So here Ravi guy, that dude, he's been allotted 25,000 shares. That means it's a pro rata allotment. He should have applied for lot many shares. Because under pro rata allotment, you apply for more, you will get little lesser. That's how pro rata works. Company will issue less number of shares than what you applied for. So that means this guy, Ravi dude, would have applied for more than 2,500 shares. How much we don't know. We need to calculate. But he has been allotted 2,500 equity shares. That's the thing. Okay. And this person, he did not pay the allotment money. He got the shares. He applied for it. Application money he paid. Allotment money, kayet pitru. He became suddenly, he said, no, namduke financial halat bad. Okay. So he did not pay. The amount received on allotment is how much they are asking. 4-feature question nahi. They are asking how much money did the company totally receive at the time of allotment, not application. Okay. Good question. Little time consuming question. You will see when we keep solving it. Yeah? So you just have to bear with me. We'll go step by step, but bear with me on this. Don't worry about copying and all. Just pay attention first. Okay. First, I'll solve it here. First, I want total application received. Total application, or I'll call it as total application money received. I'll reduce one step. Total application money received. How many shares did we receive application on? Company wanted to issue 20 lakh shares, all right. But over enthusiastic people, they applied for 35 lakh equity shares. That means we have received 35 lakh share application. Just like that, we won't consider. Along with application, they also need to pay application money. Yes, top application money. Application money is 3 rupees on one share. That means on this 35, 3 rupees is application money on one share. On 35 lakh shares, how much is application money? 35 into 3 is 105 lakhs. So company has received 105 lakhs in total as application money. That's the first thing. Yes. From that, what did they do? 7 lakh people, company showed the boots. They rejected application. That's what I'm not telling. They told. Correct? No. Applications on 7 lakh shares were rejected. Just like that, if you say reject, will they accept? What will they say? Hey, macha, give my money back. Because they would have paid application money on 7 lakh shares. No? If no shares are allotted to them, the company has to refund the application money to them. That means this is the total money received. From this, they will refund. Or I'll write it as applications rejected. Rejection candidates. How much is rejected? 7 lakh applications were rejected. And these guys also had paid 3 rupees on one share. That means how much application money company had to refund. In 1.105 lakhs, 21 lakh company refunded. Is this okay? Okay, next, just check. How much is application money required? Can you tell me how much was application money actually required? Application money required. Did the company have intention to give 35 lakh equity shares, or what was their intention? Their intention was to issue only 20 lakh equity shares. If they want to issue only 20 lakh equity shares, they want application money only on 20 lakh equity shares. Yes. And one share, how much is application money? 3 rupees. That means their expectation was how much? They had to recover. They thought they will recover 60 lakh as application money. But they recovered more. Now can you tell me what is this? In 105 lakh mein se, 21 lakh was refunded. How much remains? In 105 mein, 21 gone means how much remains? My calculator is showing 84 lakhs. So the company still has 84 lakhs with it. But how much is required? Required is only 60. Yes, that means what is that excess? That excess is 24 lakh rupees is the excess money company has, because they went for pro rata allotment, right? So they have some excess application money. What will the company do? Will they refund this 24 lakh back to the shareholders? No. After application, what will come? Allotment. So this 24 lakh, the company will adjust it with allotment. This is the first step to find out how much is excess. So I believe this is okay for you. Yeah. Excess application money received is 24 lakh. Now there is always one super duper Indian who's Ravi, Mr. Ravi. He said, I changed my mind. I don't want your company shares. Okay. So what did he do? He could not pay the allotment money, but hang on, he's been allotted 2,500 shares. Ravi, no, we'll have to do some drama. What is the drama? I will write here. Check. See if you are able to understand this working. Applied, allotted, mathematics. Now, here, check. The company, how many shares the company wants to allot in total? 20 lakh. Are they allotting 20 lakh shares to 35 lakh shareholders? No. We received applications for 35 lakh, no doubt. But in this 35 lakh shares, some we said Tata bye-bye. To how many guys we said Tata bye-bye? 7 lakh. Because we did not give them even a single share. That means to the remaining guys, we are giving some shares. Yes. So how many remaining guys means what? In 35 lakh shares mein se, 7 we have rejected means how many guys remain? 28 lakh guys. Yes, no? So pro rata allotment is working like this. If you apply for 28 lakh shares, company will allot 20 lakh shares. Indirectly, they're telling this way. How 28 lakhs? How I got this 28 lakh? Total application received is 35. In that 7 lakh applications were rejected. Meaning they did not give even a single share. Nothing they got. They paid the money. Company paid their money back full. So that means the remaining guys are only 28 lakh. For these guys, we are giving something. We can't give full. Because company wants to allot only 20 lakh. So company is doing pro rata allotment like this. If you apply for 28 lakh shares, company will allot 20 lakh shares. Yes. Now our favorite dude, Ravi, he got what he applied they gave, or he got allotted they saying. Ravi allotted 2,500 equity shares. That means Mr. Ravi, he's been allotted 2,500 shares. 2,500 only, no? Yeah. That means how many shares has Ravi applied for? First we need to know that. So that we don't know. We're calling it as X. So that means how much is that? Shares applied by Ravi is how much? Shares applied by Ravi. How much? Yes to K. It will be 2,500 into 28 lakh divided by 20 lakh, which will be 2,500 into 28 divided by 20. 3,500 shares. That means Mr. Ravi has applied for 3,500 shares. Now let's see if Ravi has paid any excess application money. Because he has applied for 3,500, no? That means what is money received? Application money received from Ravi. Application money. I'll write it here. Application money received from Ravi. Because Ravi did not pay allotment money. Application money he paid. He has applied for, just now we found out that he has applied for 3,500 shares. That means he would have paid application money on 3,500 shares. And application money is 3 rupees per share. We know this already. That means how much is the application money Ravi has paid? 10,500 rupees he has paid. But did Ravi get allotted 3,500 shares? No, Ravi got allotted only 2,500 shares. If company is allotting only 2,500 shares to him, if he had paid application money just on 2,500 shares, it would have been sufficient, correct? No. He got 2,500 shares means he should have paid application money on 2,500 only. But since he applied for more, he paid more application money. Or can you tell me what was application money required? Application money required from Ravi. Application money required from Ravi. He has allotted only 2,500 shares. That means application money was required only on 2,500 shares, which was 7,500. If he had paid 7,500, that would have been good enough. But he has paid 10,500. That means, has he paid any excess? Yes. How much excess he has paid? 10,500 minus 7,500, which is 3,000. So Ravi has paid 3,000 rupees excess because of pro rata scenario, pro rata allotment, not purposely. Because company did pro rata allotment, you will get some excess. And Ravi has paid an excess of 3,000 in this case. Are we okay? Till here. Now, can you also tell me what is the allotment money due? Allotment money due from Ravi. We'll do of Ravi calculation here only. How much is allotment money due from Ravi? Ravi has been allotted 2,500 shares. Application money is 3 rupees. Allotment money, I think they told 7 rupees here. Allotment money is 7 rupees. So on one share, allotment money required is 7,000. Can you ask 7 rupees allotment money again on 2,500 shares from Ravi? Can company ask? You can ask, but will he pay? He will show porke only. Correct? No. What will he tell? Hey, I've already paid excess. No. Why are you asking again full money from me? First adjust that. Wouldn't he say that? This is the total money due from him. But at application stage only, he has paid 3,000 rupees excess. Yes. That means how much is the due from him? On 2,500 shares, 7 rupees he had to pay, but he has already paid an excess of 3,000. That means how much is due from him now? Only 14,500. This is the thing. And did he pay this 14,500? He did not pay. This is what I required. This is the crunch adjustment in this problem. Yes, little lengthy, I perfectly agree, but you know the trick as to how to go about solving this paper. So hope you have understood this. So Ravi, Mr. Ravi, he has not paid 14,500 rupees or 14,500 rupees. He has not paid. Allotment money he has not paid to the company. Now coming to the answer or question ka requirement. What did they ask? What is the total allotment money company received? That is what we are answering here. Total allotment money. Or maybe we'll just go it here only. First, can you tell me what is the total allotment money due? Total allotment money due. How many shares is the company wanting to allot in total? Not to Ravi, to everybody. We're calculating everybody now. Okay. Total allotment is 20 lakh shares. And what is the allotment money on one share? 7 rupees. On one share, 7 rupees. How many shares in total? 20 lakh. That means how much totally company expected? 140 lakhs. Yes. But can the company ask 140 lakh from all the shareholders again? No, unfair. Why? Sir, first working note you check. Because many shareholders have already paid excess. How much is excess? Application money only 24 lakh they have paid excess. Did the company refund this money? No, what did the company tell? This I will adjust with allotment. And now we are coming with allotment only, no? That means what we have to do? Deduct excess application money. Deduct excess application money. Because we need to adjust that. How much is excess application money we have to adjust? 24 lakh. Yes, we have to adjust. Remaining guys had to pay. This is 24 lakhs. Remaining had to pay. But all other guys are nice. They paid. But except Ravi. Ravi, no, we had to collect 14,500 rupees from Ravi. Ravi told, sorry boss, can't pay. That means this much money, if you take 140 lakh minus 24 lakh, that will be the total application money which was due. In that, Ravi only did not pay 14,500. Ravi's due is how much? Ravi's due is, we just now calculated to be 14,500. That means 14,500 the company did not receive. Means balance guys paid. From 140 lakh, first you will adjust 24 lakh. Okay. So 140 may say 24, if you adjust, how much you're going to get? 140 lakhs minus 24 lakh if you do, you're going to get 116 lakh. So the company expected shareholders to pay 116 lakh as allotment money. But in that 14,500 allotment money, Ravi did not pay. That means balance guys paid. The balance is nothing but total allotment money received. Total allotment money received. So just do this calculation. 140 lakhs minus 24 lakh. I'll represent this also in lakhs. If you write this in lakhs, it will be 0.145 lakhs. Or you can write full value also, not a problem. So do this minus 1.45 if you do, you're going to get 115.855 lakhs. This is the total. Perfect. This is the money the company received. So that means which option? 115.855 lakh means which option? 101 crore 15 lakh 85,500. Delhi. D for Delhi is the right option here. Yes. Took nearly 10 minutes. Yes. Maybe a little more. Yeah. In your examination also, if this question comes, you will take at least 3 minutes. Just be 2 to 3 minutes. Pakka you will take. Maybe a little more. Even if you are a lot quicker also, it will take 2 to 3 minutes at least. Hence I'm saying always plan it. The moment you get the question paper, don't be in a hurry. It's not necessary you have to answer in that order only. Solve the questions first what you are comfortable with, what you perfectly know. First get that right. Remaining questions which you feel is little tricky, or if you feel that takes a little extra time, solve it later. Okay? That's how you go about answering. Few questions will definitely be lengthy, no doubt about it. Because few questions will be straightforward also. You will see in the paper, in this paper, almost 38 marks were theory questions. Straightforward. That means you can answer those 38 questions in under 20 to 30 minutes flat. In 20 minutes, almost 30, if you know everything means 35 marks in your pocket. Remaining questions like this, you can afford to spend a little time, no? Yes, that way they will set the paper. You can expect a lot of theory questions here also. I mean, this attempt also. Yeah, because CS normally works like that only. You'll get a lot of theory questions, even in practical paper. Some practical questions will be little on the lengthier side. So final answer is D for Delhi. That's your answer for question number 6 as such. Alright. Yes. You will be given a booklet for working. You will be given a worksheet. So you can answer your working don't do all the working in the OMR sheet, guys. Do the workings in the worksheet provided to you. You will be given that. Okay. Be a little conjuice. Okay. You may not get too much of worksheet also. So solve it small font size may, or preferably solve it in pencil. Lot easier. Okay. Personally, if I was a student, first I will always do theory questions. Okay. Or those questions which can be answered soon. Because these sort of questions, it's always time versus marks. Personally. Okay. But I'm not saying skip all those questions. I'm just saying do it little later. Okay. So that it should not freak out. Because if you start with this question only, and if you came to know you took 15-20 minutes, psychologically you're in back foot. That is the reason purposely they give 1 or 2 tough questions at the front. If you just check, we are in the 6th question. 2 questions looked a little lengthy for you. Yes. Purposely they'll do this. So that to put you a little bit on the back side. So you have to figure out your own order of solving the questions. That is very important at professional. Not only this examination, every professional examination, that's the way it works. Okay, coming back to next question. Rule 17 of companies share capital and debenture rule is related to what? Again, Companies Act section. This is related to buyback of shares in securities. Answer is B. Bendukaluru. Bengaluru. B answer for that. Next, in case of buyback of shares, passing the special resolution is not required. We have learned this. Maximum the company can buy back is 25% of paid up capital and free reserves. Yes. Up to 10% board resolution is good enough. Beyond 10%, special resolution is required. This is what we have learned it in charts. So that is what they're asking. When is special resolution not required? Special resolution is not required if the buyback is 10% or less of total paid up capital and free reserve. Chennai, see. If you're buying less than 10% of paid up capital and free reserve, then special resolution not required. Board resolution is more than sufficient. So hence, C for Chennai is the right answer for question number 8. Next, for the companies whose financial statements comply with accounting standards prescribed in 133 of Companies Act 2013. Section 133 deals with Ind AS, sir. Ind AS. We have studied Ind AS. Yes. Yeah. So, if Ind AS is applicable to the company, then there is a small clause. I'll tell you here only. The premium payable on redemption of preference shares shall be provided out of what? If you are redeeming preference shares at a premium, it is a loss, correct? Not loss, where do you transfer it to? To P&L. But hang on, you have securities premium. Securities premium has 5 purposes. One of the purpose is what? If there is any premium on redemption of preference shares or debentures, then that loss can be adjusted with securities premium. If you don't have securities premium, then you will transfer the loss to P&L. That is a normal provision we have learned. But if Ind AS is applicable to the companies, then Ind AS prohibits using securities premium for this purpose. Meaning, if you have any premium on redemption of preference shares or debentures, compulsorily it has to be adjusted with P&L account only. No securities premium. This is as per Ind AS. AS allows this. Ind AS does not allow this. A concept. Okay, as per accounting standard, very much allowed. Here it is not allowed because there will be a little manipulation possible here. Hence, they have just brought in this concept. Okay. So hence, these sort of profits has to be, any premium has to be adjusted with profits of the company only. That is the section as such. Fine. So somebody is wondering, so what could be this thing? That is not required for you. Too much, it will be all right. What the manipulation actually was happening was, okay, if you just wanted for your knowledge sake, not really for this. What the companies used to do is, okay, let's say company is issuing debentures, sir. Company is issuing debentures. Let us say average interest rate of debentures in the market is 12%. Meaning, if these sort of companies, there will be average rate in the market. Okay, so average rate of debentures for this company in the market is 12%, meaning all the competitors are giving debentures at 12% only. Okay, but this company feels, I will give only 10%. This company is telling, I will only give 10%. Tell me, will debenture holders buy this company ka debentures? Average rate in the market is 12%. But this company is offering only, let's say this is X Limited. X Limited is only offering how much? 10%. Will debenture holders buy? They will say, hey, yumduka waste. Competitor only better. Because all other competitors are offering 12% interest. You are offering only 10% interest. So I will not buy from you. Okay. X Limited told, don't be in a hurry. Listen to me full. This is just one option. I will give you 10% interest only. I will not change that. Let's say debenture ka face value is 100. When I redeem this debentures ultimately, it's a loan, right? Company will repay the loan at some point of time. That only we call it as redemption. Yes. This company is telling, RP we'll call it. RP means redemption price. Company told the debenture holders, I will not pay you 100 rupees. I will pay you 102 rupees. I will pay you 102 rupees. Meaning what is the company telling? See, I'll give you less interest. I'll give you less interest now. I will compensate in the form of premium on redemption. And when I redeem now, I will give you more price. That way, it will get compensated for you. Now the debenture holders thought, anyway, this is Aliya Allah Magalaganda scenario. Yes, because competitor is paying 12%. This company is giving 10% interest, but at the time of premium, they are paying me extra. That way, I am getting compensated. Fine. So debenture holder said, no problem. Go ahead, macha. I like your deal. No worries. We'll have it. Now look at the advantage for the company. Here, what the company started doing is, sir, debenture interest, right, is a charge against profit, sir. The interest that the company pays is a charge against profit, meaning it will go to P&L. How much interest will go to P&L? Only 10% interest, yes, no? But actually, company should have paid 12% interest because that is the average rate. But this company is paying only 10% interest, means they will only transfer 10% interest expense to P&L. The premium on redemption of debentures, no, this 2 rupees premium is there, right? Correct? They will not transfer this to P&L. They will set it off against securities premium, because premium on redemption of debentures can be set off against securities premium. This way, what happened? Profit manipulation started happening. Meaning, companies are showing less expense in P&L. This redemption they are able to set off against securities premium. So, window dressing started happening. So, Ind AS said, nothing doing. Nothing doing. All this I will not allow. That is the provision they've asked here. And if Ind AS is applicable, then if you have premium on redemption, then it has to be adjusted against P&L only. That is the concept of Ind AS. Ind AS runs on substance over legal form. Okay, these sort of manipulations, they started curbing these practices. This used to happen. Okay, that is what they try to curb. Fine. Okay, so that is the logic. Just for this, only for the sake of your knowledge. Okay, what I told. Not nearly necessary for examination. Examination answer is A, alpha. Ninth one is alpha. We'll go for next question. See, now we're getting theory questions back by back. Practical questions over. Now we're getting, most of them are theory. Rishi sir, you can close up the video. Okay. Fine. Or else sit, it's okay. The capital redemption reserve, CRR account, capital redemption reserve account, may be used for what purpose by the company? If company has a CRR, it can be used just for one purpose. What is that one purpose? No problem, sir. Security premium has 5 uses. Okay. But CRR has just one purpose. That is bonus shares only. So CRR, if you want to utilize, company can use CRR only to give bonus shares. So A, alpha is the right answer for this question. 10th is alpha. Okay, next question number 11. A company offered 2,50,000 equity shares to the public for subscription. This much they want to give. 70% of the public issue was underwritten by G. This is an underwriter wala question. So the company has appointed, whenever company sells the shares or their debentures, they take the help of underwriters. So what is the beauty of underwriter arrangement? If public does not buy the shares, then underwriter will buy those shares. That's a difference between, a primary difference between an underwriter and a broker. So public does not buy means underwriter will take up those shares. Here the underwriter is G, and G told, I will take up 70% responsibility. In our question, we used to call this as gross liability. You remember the chart? Yeah. Our question, they're asking underwriter question. I'll show you the chart again. Her firm underwriting, G ka firm. Alright, G is a person. Normally we appoint company as an underwriter, like Citibank, Deutsche Bank, Morgan Stanley. These investment bankers normally will be underwriters. So G is a person who is working for that Citibank or Deutsche Bank, who is in charge of this activity. So G ka firm, her firm underwritten was 40,000 shares. Firm underwriting. Remember, firm underwriting means those shares which has been taken up by the underwriter for themselves. They're not buying the shares to sell it to the public. They're buying the shares for themselves. How much is that shares? 40,000 shares. This is nothing but firm underwriting, we used to call it. The public subscribed for 1,30,000 shares. Company wanted to roll out 2.5 lakh shares. Public applied only for 1,30,000 shares. That means under subscription. What will the company tell? Hey underwriter, nimduke responsibility. Take. Public did not buy means you take it. Yeah. What is the net liability of G? Since public did not buy, G ka firm should buy it. Yes. They're asking what is the liability of G. Next word is careful, important. Read that. If as per underwriting agreement, no credit, full underwriting, ujad bidi. Yeah. No credit is given to underwriter for her firm underwriting. You remember theory sentence of this? We had done it also. Maybe you've forgotten. I will just show you the chart. Hang on. This is our chart. We did, yes, for on chapter number 3, we did share capital. We had put up this chart. Under point number 9, we had underwriting wala pointer. Check. This is the format. Yes. We had gross liability. From gross liability, what do? Deduct marked forms. Marked forms means those applications which has the seal of the underwriter. Normally, there will be more than one underwriters. There will be little confusion. As to who sold, there will be confusion. So, whenever underwriter sells any shares, he will put his firm ka seal. That sealed forms, we call it as marked application. Okay, if there is no seals, then we call it as, if there is no seal, then we call such forms as unmarked applications. And what do we do for unmarked application? We have already discussed. Distribute that in GL ratio. GL means gross liability ka ratio mein you distribute. And if there is any firm underwriting, deduct this. Finally, you will get net liability. Yes, that's how we got the answer. Correct? No? Yes. Now check. If last point is very important. I had also discussed this when we did this. I told in the 2019 paper, they've asked this question. Check. If credit for firm underwriting is not to be given, this is a keyword. If credit for firm underwriting is not to be given, then add firm underwriting to unmarked forms and do the above steps. Treat firm underwriting as unmarked application and do the same steps I had told you. Yes, that is a component of chart. That is what they have targeted here. That is what we need to apply it here also. But except here only one underwriter is there. So let's solve it in the same format so that it becomes a little easy for us. Particulars. One problem here is G, only one underwriter is there. Mr. G. Did G take 100% responsibility? No, G told I only sell 70%. That means what? Out of the total shares में से 70% responsibility taken by G. Balance 30% taken by the company itself. That means in this case, company is also selling shares to the public. Underwriter also is selling shares to the public. Both are doing activity. Company is selling only 30% extent. Underwriter is selling 70% extent. That means we will make two. Normally in our questions we used to solve A, B, C, meaning underwriter A, underwriter B, underwriter C, like that we used to write. Here we'll have a column slightly differently. We'll write company and then we will write G because both are selling. No? Company is selling its shares and underwriter G also is selling the shares. So we'll have the format like this. Yes, plain application of format. That's it. Logic and all we have discussed there only. So first, what do we take? Gross liability. Yes. So company ka responsibility is how much? If underwriter ka responsibility is 70% means company ka responsibility will be 30%. That means can I say the ratio is 30:70 or can I call it as 3:7? They are sharing the responsibility in that ratio. Yes. What is the total shares which the company wants to issue? 2,50,000. So how much responsibility is company taking? Company is taking responsibility to the extent of 30%. Or you calculate 3:7. 2,50,000 into 30% you do. How much you getting? 75,000. Company is telling 75,000 I will sell on my own. No need of your help. Balance 70%. 70% means 2,50,000 ka 70% will be 1,75,000. How I got this means if you're wondering, you just take 2,50,000, distribute it in 3:7 ratio or 30% 70% ratio. You will get 75,000 and 1,75,000. This is the responsibility taken up by the company and G. Done. This is the gross liability. From this first, what do we need to do? Deduct marked forms. Deduct marked forms. How much is marked forms here? Yes. We received applications for 1,30,000 shares. But from whom? Don't know. So that means what we have to do? That 1,30,000 also you distribute it in 3:7 ratio. Because we don't know who sold, right? So think that in the same ratio, both of them have sold. 1,30,000 into 30%. How much? 39,000. 1,39,000 into 70%. How much? 97,300. So these many shares have already been sold. That means underwriter will not take up responsibility of this now. Whatever is unsold, that only underwriter needs to buy. Yes, correct. Done. Okay. Unmarked forms. How much is unmarked forms here? They have not. Actually, you could treat this also. 1,30,000 forms also as unmarked only because we don't know who sold, right? Instead of writing firm underwriting, this also, instead of writing marked forms, this also you could have written it as unmarked only, not a problem. Yes, you can write like that only, that also. So I'll just, since I've already written, I'll just write this as unmarked forms. Have they given unmarked forms separately in the question? Unmarked forms separately in the question? We read the question, we didn't find anything. But, check what did they tell. If credit for firm underwriting is not to be given, they said. If credit for firm underwriting, if it is not to be given for G, then what is the step we just now learnt in chart? If credit for firm underwriting is not to be given means, then treat those firm underwriting shares as unmarked application and do the same steps. We have done all those questions. Yes, we have repeat. I think 1 or 2 questions we have done on this. So check, is there any firm underwriting? Yes, firm underwriting is for 40,000 shares. So since the credit is not to be given for firm underwriting, what you do is treat firm underwriting shares as unmarked forms. And what do you do for unmarked forms? Unmarked forms, generally you distribute it in gross liability ratio, meaning you have to distribute this in 3:7. Actually, this, instead of writing marked forms, this also you could have written it as unmarked only. Not a problem. Why? Because this also we don't know who sold. Hence, this also is unmarked only in a way. I've already written, so I'll not make correction. If you want, you can write unmarked application as 1,30,000 and 40 and take it as 1,70,000 also. Not a problem. Fine now. Is that okay? So now calculate 40,000 into 30% will be how much? 12,000. 40,000 into 70% how much? 28,000. Yes, you deducted this also. Firm underwriting, will we deduct again? No. Firm underwriting only, we are treating it as unmarked applications here. Why? Clearly in the problem they told credit should not be given. If credit was to be given means, if they had told credit is to be given, then what we would have done? This 30,000, who took it up? G ka firm. That means I would have subtracted entire 40 from G ka liability only. If he had got the credit means. If he had got the credit means entire 40 I would have deducted from him. Here only. That's what we did. Yes. But here, since they said credit is not to be given, then you have to treat this 40,000 as unmarked application forms. And my unmarked application form we distributed in gross liability, GL ratio. Okay. Find out the net liability, guys. How much you're getting it as net liability? First, they did not ask company ka liability, guys. If you want, you can compute also. 75,000 minus 39,000 minus 12,000. It will be 20. This will be 24,000. That side will be 1,75,000 minus 97,300 minus 28,000, which will be 49,700. So that is what they asked. What is the final net liability of underwriter ka? Which will calculation mistake. Just check. I think one calculation mistake happened, I guess. 1,30,000 into 70%. Okay, this is not 97,300, guys. My bad. This is actually not 97,300. Calculator mistake. This should be 91,000. Okay, now you calculate 1,75,000 minus 91,000 minus 28,000. If you do, how much you're going to get? 56,000 shares you're going to get. 56,000 shares should be there. Done. So that's what they asked. What is the net liability of underwriter? So it will be 56,000 shares for underwriter. Done. This is your net liability. These questions we have done. Excuse me. 56,000 Delhi. Okay, next. The entry debenture suspense account debit to debenture account can be passed or can be done under which scenario? When will you pass this entry? Debenture suspense account debit to debenture account. When debentures are issued as collateral security. Remember, when debentures are given as collateral security, there are two options. One, no journal entry. Two, if at all you want to pass the journal entry, then you will pass debenture suspense account debit to debentures account. So means this scenario or this journal entry will only come when the company has given debentures as collateral security. Which option is that? Yes, on issue of debentures as collateral security, which is B, Bengaluru again. Next question. C Limited issued 8% debentures of rupees 65 lakh rupees. That means this debentures have an interest rate of 8%. Value of face value of debenture is 65 lakh. 1 minute. Yeah. At 5% discount. The company has given debentures at discount of 5%. Discount means it's a loss for the company. Correct? They're issuing debentures at lesser value means it's a loss. And these debentures are redeemable at a premium of 10%. Yappa. They issued the debentures at loss, meaning they issued the debentures at discount, meaning they made loss. They're redeeming the debentures at premium. That means they're paying extra. That is also loss, no sir? That means how much is the total loss percentage here? Discount loss is 5%. Premium loss is 10%. That means the total loss is 15%. The company is incurring 15% because both are loss. No, when we have done this chapter again. Whenever they say loss on issue of debentures, loss could be two things. One, if debentures are issued at discount, that is also loss. If debentures are redeemed at premium, meaning if the company is paying more at the time of redemption, that is also loss. So here the loss is 15% the company is incurring. So then now let's see what they're asking. On recording the transaction, loss on issue of debentures will be debited. Loss means you will obviously debit. That's a nominal account rule. All losses should be debited. They're asking how much will you debit? Whatever is the loss, you will debit by that much. Can you tell me what is the total loss? This is total loss percentage. Can you tell me what is the total loss in amount? Total loss in amount. Face value of the debenture is 65 lakh rupees. Premium, discount, dividend, all these calculated on face value only, no? Face value is 65 lakh. Total loss is 15%. Calculate 15% of this. 65 into 15 lakh is how much? 9 lakh 75,000. So total loss is 9 lakh 75,000 means the company will debit the amount by 9 lakh 75,000 only. The option is C, as in Chennai. That is the answer for this particular question. Okay. Alright. Again, 14th is important question. So when I'm marking important, that does not mean it will repeat. When I mark the word important, what I'm trying to say is it is time consuming. Little extra time. Meaning conceptually, it is little more tricky. So you have to be a little careful. That's what I mean by this mark. This mark doesn't mean it will repeat. Okay, I don't know. I am not setting paper. Yeah. So these are little extra time consuming, or you have to be a little careful when you're solving this question. That is what I'm trying to say by that mark. Okay. So read this question carefully. M Limited has issued about 8% debentures of 60 lakh. So that means 60 lakh is the face value of these debentures. And they've issued it on 1st January 2019, sir. At a discount of 10%. Same. Here also the company has issued it at a discount only. Okay. The debentures are redeemable. Meaning, redemption means paying back or cancellation. The company is paying back this loan in the form of debentures in 3 equal installments, sir. Underline this. We have learned debentures. There are various methods of redeeming debentures. One, lump sum method, or annual installment method, or converting the debentures into equity shares, or purchasing the debentures from open market for immediate cancellation. Yes, those are few methods of redeeming debentures we have discussed. So here, second method in our chart, if you just check in our chart, it was the second method, annual redemption. So they are cancelling in 3 equal installments of 20 lakh each, payable on 31st December every year. Every year they will pay 20 lakh each. What is the total value of debentures? 60 lakh. How much are they repaying every year? 20 lakh. That means they are repaying in 3 installments. That is what they have given here also. They are redeeming these debentures in 3 equal annual installments. Redemption date is 31st December. When 31st December comes, the company will pay off this. Okay. The amount of discount, yes, to be written off at the end of the year. The key word here is, guys, this one. The amount of discount to be written off for the year on 31st March 2021 will be how much? If there is any discount loss, what do? It's a capital loss. You try to set it off with capital reserve. If that is not there, then you treat it as deferred revenue expenditure and you write it off. Yes, that's what you do. You write it off for P&L. Here, you are redeeming the debentures in 3 years. That means, can we write off equally in 3 years? That's something we can't do. There's a small adjustment here. Yes, you have to defer this, meaning this loss has to be transferred to 3 years P&L, no doubt. How much is something we need to calculate. For that, this is a very keyword. Be careful on this. So I'll put up a small table and I will calculate this. I'll call this as date, debenture balance outstanding, debenture balance outstanding. Then I'll find out the ratio of this. Then I will find discount to be written off. Discount written off. Okay, before I put up this column, let's find out what is the total discount. First, total loss or total discount we'll find out. What is the face value of the debenture? 60 lakh. These debentures were given at what discount rate? 10%. If you're giving debentures at discount, means it's a loss. Discount is 10%. That means what is the total loss, guys? These debentures are not redeemed at premium. So there is no premium loss here. There is only one kind of loss. That is, these companies are issued at discount. So that discount only is the only one type of loss that we have. 10% discount, which amounts to 6 lakh rupees. Since there is no question given about capital reserve, this 6 lakh has to be transferred to P&L as a deferred revenue expenditure. They are asking you on 31st March 2021, how much of discount will you transfer to P&L? A very specific question. They did not ask you total discount. If I asked total discount, I would have selected the option as 6 lakh and went on. But they asked how much of this loss will you transfer to P&L when you prepare P&L for the year ended 31st March 2021. Very specifically they've asked. Hence, this is the keyword here. Okay, always keep that in mind. Hence, I boxed it in a different color. Okay, so let's have this 4 columns. Okay, when did you issue the debentures, sir? On which date did we issue the debentures? 1st Jan 2019. Yes. What is the value of debentures? Like shares, debentures are always shown at face value. What is the total face value of the debenture? 60 lakh. That means debenture account balance on 1st January 2019 will be 60 lakh. Got it? Yes. Next, 1st January 2020 I will calculate. 1 year, I'll add. How much do you think will be debenture account ka balance? Will it be 60 lakh again? Will debenture account have a 60 lakh balance again? Will debenture account have 60 lakh balance? No. Why? Sir, every year company is paying back how much? 20 lakh. They are redeeming debentures. Every year, come 31st December, they issued the debenture on 1st Jan 2019. Then on 31st December 2019, meaning after 1 year, company will repay 20 lakh. Then again on next 31st December, again 20 lakh. Then again 31st December, another 20 lakh. Like this, company is choosing the redemption option. I'm not telling all this. It is given in the question. Every 31st December, company is repaying. How much? 20 lakh. That means what will be balance in debenture account? Last year it will be 60 lakh. But at the end of last year itself, how much will be repaid? 20 lakh would have been redeemed. That means how much will be the balance in debenture account? 40 lakh. Yes, no? 40 lakh. Next year again you check. Next year will be 1st Jan 2021. Meaning 1st January 2020-21. Now what will happen here? Okay, again, company had a balance of 40 lakhs. Opening balance in the previous year. Again, last year, how much they would have redeemed? They would have repaid 20 lakh again. So how much is the balance now? Balance remaining will be 20 lakh. 20 lakh will be the balance as on 1st January 2020-21. By the end of 31st December 2020-21, company would have repaid 20 lakh. So debenture account would have become 0. This is the debenture account ka balance. Any confusion? No, right? Simple enough? Yeah. Now, what they say is, sure, so simple funda I told you when we discussed the concept. Sir, debenture discount, this, it's a loss, correct? Why is the loss occurring to the company? Because company issued debentures. This loss of 6 lakh is coming only because company issued debentures. If the company had not given debentures, then the 6 lakh loss would have not come, correct? So, this 6 lakh loss has to be written off, meaning it has to be transferred to P&L. in debenture account balance ratio. How much ever is the debenture balance, in that ratio you need to write off the loss. That is the funda. So check the ratio of this. If I calculate the ratio of this, how much it will be? Okay. If I calculate the ratio, can I write this as, I'll cancel off all the numbers. Can I write as 6:4? I'll take off all the 0. I'll just write it as 6:4:2. Is it okay? Or in other words, can I also write 2 3s are, 2 2s are, 2 1s are. So the ratio is 3:2:1. Can I write it this way? The ratio of these three things is 3:2:1. Yes. So I have to write off this discount in this particular ratio. That means how much should I write off as discount every year? Total discount is 6 lakh. In this ratio I need to write off. Can you tell me the ratio of this? 3:2:1 means, how does the calculation? 3:2:1 means when you add all the ratios, 3 plus 2 plus 1, you will get 6. So into 3/6 you have to do. How much will this be? 3 lakh. So first year, rather for the year ended 31st December 2019, you will transfer 3 lakh to P&L. Next, you will write off 6 lakh into, what is the ratio? 2 here. That means you will write 2/6. 3:2:1. So when you add everything, you're going to get 6. So this is 6. This number is 2. So you do 2/3, how much it will be? 2 lakh rupees. So you will transfer 2 lakh for the year ended 31st December 2020 for this year. Next year, it will be 6 lakh into number is 1. So you'll write 1/6, which will be 1 lakh. That is how you transfer the debenture to P&L. So why is all this not necessary? Why can't we do it equally? Why can't I transfer out of the 6 lakh? Why can't I transfer to P&L 2 lakh every year? That could also be a valid question. Instead of doing so much drama, you could have just said, every year, this debentures I'm redeeming in 3 years. So I will transfer this 6 lakh over a period of 3 years. So meaning every year I'll transfer to 2 lakh. Then also it will be same answer. The problem there is, sir, this loss is occurring only because of debentures. So better approach to write off this loss is with respect to debenture account balance. What you are thinking could be right when the company repays the debenture in one installment. Meaning they are not cancelling the debentures in installments. We have done that problem also, if you remember some MCQ question. We have not done all this drama. Straight away we have written 6 lakh divided by 3. But if you compare this problem and that problem, the key difference is in those problems, we redeem the debentures in one installment. Like company took 60 lakh from the debenture holders. They will also repay 60 lakh, entire 60 lakh in one installment. So if debenture is happening in one shot, then what you are thinking would be absolutely right. You could have just written 6 lakh divided by 3. Because every year debenture account balance is same. Even if you apply this method, it's not different method. That also is same. Since you are redeeming debentures in one installment, every year debenture account will have 60 lakh, 60 lakh, 60 lakh. So when you calculate ratio, it will be 1:1:1. Fair enough. That was our problem which we solved. But here, that is what they've asked. They're saying debentures are getting cancelled every year. So hence you have to compulsorily follow this method only. So what is the answer? Finally tell us. Answer is also not that simple. Check what are they asked. First of all, before we answer, I will just write the period so that you will get clarity. This is what? How much is this? This 3 lakh you'll write for which period? 1/1/2019 to what? 31st December 2019. Correct? No? For this year, you will write off 3 lakh. That's what we computed. Yes. Keeping calendar. And this will be what? 1/1/2020 to 31st December 2020. For this 12 months, you will write off 2 lakhs. Similarly, last will be what? 1/1/2021 to 31st December 2021. This is the timelines, correct? No? Years. But check, if they had asked for the year ended 31st December 2020-21, how much will you transfer? Straight away I would have selected 1 lakh. Or if they had asked for 31st December 2020, what is the discount written off? I would have selected 2 lakhs. But check what is the thing they've asked in the question. As on for the year ended 31st March 2020-21, they are asking how much discount you will write for the year ended. I'll write it here. Discount to be written off. Discount to be written off for the year ended 31st March 2021. That's what they've asked. That means year is ending on 31st March 2021 means what is the financial year they're talking about? Year will begin on 1st April 2020 and it will end on 31st March 2021. They've asked this. But check your calculation. Did you take April to March wala year or your redemption was done on a calendar basis? Redemption happened on 31st December every year. Correct? That means you have considered calendar year here. So we can't select this option, guys. So we need how much you'll write off from 1st April to 31st March. Okay, check. 1st April 2020, where does it fall? 1st April 2020 falls here. We want from 1st April 2020 to 31st March 2021. 1st April will fall within this window, correct? No? 1st April will fall within this window. Yes, we want from 1st April 2020 to 31st March 2021. But this here, it ends on 31st December only. I mean, count from 1st April 2020. If you want, I can write it in. Or here only I'll write it. This is for how many months? This you'll write off for 2 lakhs, correct? No. We want from April to December how much? 1st April, because our period is beginning on 1st April. Yes. But here our calculation ended on 31st December. So calculate from 1st April 2020 to 31st December 2020. How much? April, May, June, July, August, September, October, November, December. 9 months. That means this value, 2 lakh what you got, no? This is for 12 months, guys. First we required from 1st April 2020 to 31st December 2020. That value. We have got that value. For the whole year it is 2 lakh. Yes. But that is for the whole calendar year. That means this 2 lakh is for 12 months. We want it only from April to 31st December, which will be 9 months. So for 9 months, how much? 2 lakh into 9 by 12, which will be 1,50,000. Yes. But did they ask you only for 9 months how much? No. You wanted discount from 1st April 2020 to 31st March 2021. So why did I stop here? Sir, this calculation was done on calendar basis. 31st March 2020-21 means it will come here. Correct? We have got the data till 31st December 2020-21. That means how much data is still missing? From 1/1/2020-21, if you calculate till 31st March 2020-21, meaning for these 3 months, it will fall within this window. If you calculate how much is the discount, then you got full year ka discount. Did you understand this portion? From 1st Jan till December, I've got the December 2020, I've got it from here. Now I'll have to calculate it further. From first, this data is from 1st January to 31st December. But we want it only from 1st January to 31st March. That means what? So again, if I were to call it as, I'll write it here, 1st January 2020-21. 1st January 2020-21 to 31st March 2021. We want it only for this because 9 months data already we got it. Another 3 months if you get it, we got the whole number. Yeah. But this value, 1 lakh, it's for the whole year. That means this 1 lakh is for 12 months. But we want it only from January to March because 9 months data we have already got. That means for 3 months how much? This 1 lakh is for 12 months. 3 months how much? So do 1 lakh into 3 by 12. How much are you getting? 25,000. That means the total discount you need to write off, no? How much? 1,50,000 plus 25,000, which will be 1,75,000. So total discount for year ended 31st March 2020-21 will be 1,50,000 plus 25,000, which will be 1,75,000. That is the option. Check which option has 1,75,000. 1,75,000 is there in D, Delhi. Little tricky and lengthy question. Some question you can expect it to be a little tricky. That is given. Everything will not be straightforward. 1 or 2 questions will definitely be a bouncer. You should expect that in paper. At professional paper, yes. Any professional matter. CA, CS, ACCA doesn't matter. 1 or 2 questions definitely will be a little bouncer only. Okay. That's the reason I marked it as important also for you. Yeah. Meaning tricky. That's the funda. That's what they have asked in this particular case, guys. Okay. Next question. S Limited has issued about 80,000. They not said rupees 80,000. They just told only 80,000. That means this 80,000 is the number of debentures. The company has issued 80,000 debentures. These debentures carry 8% interest rate. And the face value of each debenture is about $100 each. They are redeemable on 31st December 2019 at a premium of 20%. So you have to redeem these debentures. Okay, but you have to pay 20% extra to everybody. So that means you will not repay 100 rupees. Face value of the debenture is 100. But for redeeming, you have to pay a premium of 20%. That means what is the redemption price? Maybe as in when we read, we can write it. Redemption price per debenture is how much? On one debenture, how much you need to pay? 100 rupees is the face value. Since you are redeeming it at 20% premium. So can I write 100 plus 20%? That means you are paying 120 rupees per debenture. On one debenture, you need to pay 120 rupees back to the debenture holders because it's happening at premium. The company offered 3 options to the debenture holders. Okay, 3 options they have given, out of which one is to convert their holdings into equity shares. They have given 3 options. We don't know what the other 2 are, but one option is the debenture holders can convert their debentures into equity shares. That is one option. Of 10 each. Equity shares ka face value is 10 each, but these equity shares will be given at a premium of 3.5 rupees per share. That means the issue price will be 13.5. Instead of paying debenture holders cash, the company is giving equity shares to them. And the value of one, or the worth of one equity share is, face value is 10, but it's given at a premium of 3.5. That means the issue price of each share is how much? IP of equity shares is, IP of each equity shares is 10 rupees plus 3.5, which is 13.5 rupees is the value of one share for the purpose of conversion. That's what they are saying. This offer was accepted by debenture holders holding 49,275 debentures. Actually, there are totally 80,000 debentures. Not everybody accepted conversion. Only few of them accepted. On how many debentures was the conversion option accepted? 49,275 debentures. You need to calculate number of equity shares because you converted debentures into equity shares, right? So the company has to give equity shares to such debenture holders. How many equity shares will be given for the purpose of conversion? That is what they are asking. Fine. Okay, before that, first, can you tell me total payable? Total payable will be how much? To debenture holders who opted for conversion. Total money the company has to pay to the debenture holders who opted for conversion. That's because they asked only for number of equity shares. No. So I'm trying to first find out how much is actually payable to these debenture holders who said I will take equity shares. So that's what I'm writing it as, total payable to debenture holders who opted for conversion. How many debenture holders opted, or on how many debentures conversion was okay? 49,275. These many debenture holders, or on these many debentures, they said give me equity shares, good enough. But to every debenture holders, whether you're giving cash or giving equity shares, to every guy how much you need to pay? Just now we calculated. In whatever way you redeem, the amount payable is 120. Meaning on one debenture you have to pay 120. On 49,275 debenture holders, how much you need to pay? Totally you need to pay 59,13,000 you need to pay. Yeah. But is the company giving this 59,13,000 in the form of cash? They are giving the same value in the form of shares. So next step is to find out. I'll call this as A, I'll call this as B, I'll call this as C. So total number of equity shares. Total number of equity shares will be how much? Totally you need to pay 59,13,000 you need to pay. How are you repaying? In the form of equity shares. And what is the issue price, or what is the value of one equity shares for the purpose of conversion? For the purpose of conversion, the value of one equity share is 13.5. So totally 59,13,000 you need to pay. You are paying in the form of equity shares. And the value of one equity share means 13.5 means how many shares totally you need to give out. 59,13,000 divided by 13.5, which will be 4,38,000 shares. The company needs to give 4,38,000 equity shares to these debenture holders. So the option is A, alpha. That is what they asked in this question. Number of equity shares. All right. Next question. Question number 16. G Limited has 8 lakh 12% debentures of 100 each. 100 is the face value of each debentures. These debentures have an interest rate of 12%. Okay. During the year 2018-19, the company purchased its own debentures. One of the way to redeem the debenture is purchasing the debentures from the open market for immediate cancellation. Yes, that is one way we have seen. So they purchase their own debentures for immediate cancellation. Like shares, even debentures are traded. Instead of approaching the debenture holders, the company can straight away go to the market, buy their own debentures back, tear off the debenture certificate. Once they tear it off, debentures have been cancelled or redeemed. That method is known as purchase of debentures from the market for immediate cancellation. We have done the same question in the class. Okay, it's just a repeat, but still let's go with it. It's okay. So the company has purchased this debentures from the open market for immediate cancellation. So 2 times they have purchased this. Once on 1st August 2018. How many debentures did the company buy? 15,000 debentures at 95.5 x interest. Next, on 1st January 2019, the company again bought 25,000 debentures at 101.5. This time at cum interest. You remember we discussed this concept, X interest, cum interest. X interest means the purchase price of the debenture excludes the interest. Cum interest price means the purchase price of the debentures includes interest. X means excluding interest, cum means including interest. That's what the significance of the word X and cum means here. So what is the significance here, or what is the problem here? Sir, if it is if it is X interest price, I'm more than happy, no problem. But there is a big headache for me if it is cum interest price. Why? Cum interest price means the company purchased its own debentures, correct? Meaning they went to the market, they bought their own debentures. That means they have to pay some money to buy their own debentures back. Correct? That is only I'm calling it as purchase price. But here the purchase price, if it is cum interest, what it means is the purchase price of the debentures includes interest component also. Hence we calling it as cum interest. But we know a simple logic. Debenture interest is an expense. Expense goes where? Profit and loss account. Debenture is a liability. Where will you show liability? Balance sheet. Can you do chow bath mixture of this scenario? Debenture and debenture interest. Both you can merge and show. Can you show both of them in P&L? Or debenture interest. Both you can mix and show it in balance sheet. Can you do so? No. Because interest should go to P&L. Debenture is a balance sheet component. They should be kept separately. If they have mixed it up, what we need to do? We need to find out how much interest is included here and excluded. So whenever they give you cum interest price, first thing we need to calculate is some interest is included. Some interest component is included. First find that and exclude it. Only then you can go forward with further calculation. That is the first thing. Okay, so company has purchased the debentures twice. Their own debentures they purchased. First on August 1st, then on 1st January 2019. And they cancelled it. They bought it, they cancelled the certificate. Over. Debentures have been redeemed. Not fully. First they'll buy 15,000 debentures and tear off that certificate. So 15,000 debentures will get redeemed here. Again they bought 25,000 debentures here. So that means 25,000 debentures will get redeemed at this date. Okay. Let's look at the requirement here. If debenture interest, because company has debentures means they have to pay debenture interest. Debenture interest, if it is payable on 30th September and on 31st March every year. This company, G Limited, they have issued debentures means they need to pay interest. But they are paying interest, debenture interest, only on 2 intervals. First, they will pay interest on 30th September. Then they will pay interest on 31st March. That means they are paying interest only 2 times in a year. That means they are giving interest on a half yearly basis. Companies can give the debentures monthly basis, quarterly basis, half yearly, anything they're comfortable. Yes. But this company is paying the debentures only 2 times in a year. First on 30th September. That means first they will pay interest from 1st April to 30th September. 6 months ka interest they will pay on 30th September. Again from 1st October to 31st March. Again 6 months. Next 6 months ka interest they will pay on 31st March. So company is paying half yearly interest here. Indirectly they are saying that. The amount of profit or loss on cancellation of debentures. Because company purchased their own debentures, right? They purchased and what did they do? They cancelled it. They are asking, is there any profit or loss on cancelling these debentures? If at all, how much profit or loss they are asking us to compute. We calculated the same problem with the journal entry also in our class. Yes. Now they are asking only profit or loss. So let's quickly calculate this off. Yes. So question number 16. First, I told, whenever they give come interest price, the first is to find out what? How much interest is included, we need to find out and we need to exclude it. For that, if you have forgotten, I had explained you before like this. Company is paying interest only on 2 dates. First, they will pay interest on 30th September. And 30th September, how much interest they will pay? 6 months ka interest. Okay, or else I'll leave that 6 months. First, the company will pay interest on 30th September. Then they will pay interest on 31st March. Every year, that is the principle they have. Here, they will pay 6 months interest. Again, here, they will pay 6 months interest. That is what company is doing. Okay, check here. Which has come interest price? Second one. If it is X interest price, I don't have to worry about it at all. Because interest is anyway not included. So, I don't have to worry. Because I'm cancelling debenture here, no. So, I want to know the price paid for debenture alone, not for interest. X interest means interest is excluded any which way. So this is not a headache for me. But this is a headache, this purchase. On which date did I purchase this? 1st January. Now just be careful here. What is the purchase date? Purchase date of these debentures? 1st January 2019. So the company went to the market on 1st January 2019 and they bought their own debentures. How many debentures did they buy back? 25,000 debentures they purchased off, sir. 25,000 debentures they purchased off. Okay. If company has purchased 25,000 debentures means somebody should have sold 25,000 debentures to the company. Only then company can buy. Correct? No. If somebody is buying means somebody should also sell. That's how it works. So company has purchased 25,000 means somebody has sold 25,000 debentures to the company. Now check. When did that somebody sell the debentures? 1st January. That somebody who was holding the debentures. Let's say I was holding this 25,000 debentures. Okay. I sold this to the company. Let's take it that way. So I was holding this 25,000 debentures. What is the last date on which I have received the interest on these 25,000 debentures? I have sold it on 1st January. Company pays interest only on 2 dates. September and March. Have I received the interest till September? Yes. After September, I will receive the interest on March. But did I wait till 31st March to sell or I sold it off in January itself? I sold my debentures on 1st January itself. That means what? Lastly, I have received the interest only till 30th September. Yes, no. Because after September, I will receive interest only on 31st March. But before 31st March only, I sold off. That means I have received the interest only till 30th September. That means can you tell me how many months interest I have lost? I didn't get interest. After 30th September, I did not get any interest. But I was holding this debentures till January. That means October month interest did I get? I'll write it as interest lost here. Interest lost. October month did I get interest? October 2019? No. November 2019? No. December 2019? No. October, November, December. 1st January I've sold it off. So leave 1 day of January. That means how many months interest have I lost? October, November, December. That means I have lost interest for 3 months interest I have lost. Yes. Naturally, what will I tell the company? Look boss, I have not received or rather I have lost the interest for 3 months. And you are buying my debentures. You give me 3 months ka interest. Because I have lost it. This is what the seller will tell. Yes, this 3 months ka interest is included in this value. Hence they are saying that this debenture is cum interest price. So we need to calculate how much is the interest for those 3 months and exclude it. Only then we will get how much the price company paid towards buying these debentures. Okay. So this the interest lost is for 3 months. Can you tell me interest value? Interest value. How many debentures? 25,000 debentures. Interest, dividend, all this calculation on the face value. What are, actually it's paid up value. Here paid up value and face value is same. How much is the face value of each debenture? 100. So 25,000 is a number of debentures. Each debenture is a value having a face value of 100. What percentage debentures are these? 12%. 12% means you will get 12% interest. But that 12% is for interest for the whole year. How many months interest have I lost? 3 months. So 12% is for whole year. For 3 months, how much? Can you calculate this? 25,000 into 100 into 12% into 3 by 12. If you calculate, you're going to get 75,000 was the interest lost by the seller. Hence, company is paying 75,000 as interest. This 75,000 is included in this value. Hence, again, they are referring to as cum interest. Okay. So here, if you want again, can you tell me what is the total value paid or total purchase price? Total purchase price on 1st January 2019. The company purchased 25,000 debentures. Did they purchase from the open market by paying how much? The company purchased 25,000 debentures, and for one debenture they are paying a price of 101.5. This is the price of one debenture, guys. For one debenture they are paying 101.5 and they purchased 25,000 debentures. That means what is the total value? One debenture 101.5, correct? On 25,000 debentures, how much value? So 25,000 into 101.5, which will be 25,37,500. Totally, company has paid 25,37,500 to buy the debentures back. In this 25,37,500, 75,000 is towards interest. Balance is towards debentures. That balance only we call it as. From this price, if you exclude interest, what are you going to get? You're going to get some value. That value only we call it as X interest price. That means from X interest, this is nothing but cum interest, cum value, cum interest price. Cum interest price. Because they said it is cum interest. Hence, this is cum interest price. From cum interest price, cum interest means including interest. So from this, if you deduct interest, what are you going to get is X interest price. That means, can you tell me what is X interest price? In 25,37,500 is 75,000 is towards interest. Balance will be 24,62,500. That will be exclusively towards debentures. Sir, why don't you do the same calculation for the other one also? This is the purchase made on 1st January. Should we make the same calculation for this also? Not required. Why? Because they have anyway given X interest. X interest means excluding interest. So 15,000 debentures company has purchased, and on one debenture they have paid 95.5. This is excluding interest. So I don't have to do all this drama what I did for this one. This is straightforward. Okay. First, this is one working note. Once you have this working note, then we can think about calculating profit or loss on cancellation. For that, we will have 3 columns and then we will calculate particulars. First, you purchased on which date? 1st August 2018. On 1st August 2018, we made purchase. Okay. Again, we made a purchase on 1st January 2019. 1st January 2019. Okay. Alright. First is, what is the face value of the debentures? Can you tell me? Total, I'll write this as 1. Total face value of the debenture. Total face value of the debentures. On 1st August, how many debentures did I buy? I bought 15,000 debentures and each debenture ka face value is 100. So 15,000 debentures company purchased. Each ka face value is 100. That means the total face value is 15 lakh. Yes. Now I purchased these debentures. What is the price I paid? What is X interest price? What is the X interest price I paid? I purchased 15,000 debentures. Did I pay 100 rupees to buy these debentures? No. On 1st August, I was able to purchase this debenture. When I say I am talking about company. The company was able to purchase this debenture by paying 95.5 on one debenture. So on one debenture, company is paying 95.5. On one debenture, if it is 95.5, on 15,000 debentures, how much? 95.5 into 15,000 if you do, you're going to get how much? 14,32,500. Simple funda, sir. This is profit or loss on cancellation. If it is profit, I'll write it as positive number. If it is loss, I will write it as negative number. Profit or loss on cancellation. Sir, we know the funda. Debentures, like shares, are always shown at face value. Yes. So the cancellation should also happen at face value. Or in other words, what is the face value? Is the worth of the debenture. What is the worth of the debenture? 15 lakh. But when you redeemed, did you pay 15 lakh? No, you repaid. You were able to buy these debentures back at 14 lakh 32,500. That means 15 lakh worth of loan. Debenture is loan only, no? For 15 lakh worth of loan, you are repaying only 14 lakh 32,500. That means you are repaying less. If you are repaying less, means it's profit. I'm denoting this as 3. 3 is equal to, can I write as 1 minus 2? Yeah, 15 lakh is a worth of debentures. But I was able to repay it at 14 lakh 32,500. That means how much profit I made? When I cancelled this debentures, I made a profit of 67,500, which is 15 lakh minus 14 lakh 32,500. This is on 1st August. Did they ask 1st August ka profit or cancellation, or they asked total profit or loss on cancellation in the question? Check. They asked the total profit or loss on cancellation. I have purchased the debentures once more, no? After this, again I purchased on 1st January 2019. Meaning same working note, I have to do it repeat here. On 1st January, how many debentures did I buy? Did the company buy? 25,000 debentures. The company purchased 25,000 debentures. Each ka face value is how much? 100. That means the total worth of the debenture is 25 lakh. But at what price? What is the X interest price? Should I have to calculate, or I have already calculated? 1st January ka X interest price I have already calculated. Check. X interest price on 1st January 2019. It's this, which is 24 lakh 62,500. 24 lakh 62,500 already calculated. So the worth of the debenture is 25 lakh. Company was able to repay, meaning they were able to redeem or purchase these debentures back at 24 lakh 62,500 only. That means again they have paid less. Instead of paying 25 lakh, they've only paid this much, 24 lakh. 24 lakh 62,500. That means again they made a profit of how much? 37,500 when they cancel these debentures. That means, can you tell me what is the total profit the company made? What is the total profit? Total profit is, first time they made a profit of 67,500. Next time they made a profit of 37,500. So 67,500 plus 37,500 gives you a profit of 1,05,000. So this is the total profit the company made on cancellation. We discussed the same problem with journal entry. Here they have not asked the journal entry. It is not required for us also. So total profit on cancellation is how much now here? Option D, which is 1,05,000. Again, a little lengthy question, but it'll offset. Don't worry. So that is the answer. 1,05,000 is the answer for that one. Okay. Next, all theory questions will come line by line. The profit on cancellation of debentures. Just now we saw profit or loss on cancellation. This is the profit. This, how often does this transaction happen? Every day or non-recurring? These are non-recurring transaction. All non-recurring profits we call it as what? Capital profits. All capital profit will be transferred where? To capital reserve. So if at all there is any profit or loss on cancellation of debentures, that will be transferred where? To capital reserve. That is the next question. The profit or loss on cancellation of debentures should be transferred where? It should be transferred to capital reserve. Daily. 17 is D. Every buyback should be completed. If a company wants to buy back any equity shares, meaning if they want to cancel any equity shares, they must be completed within a period of dash from the date of special resolution. From the date of resolution or special resolution, as the case may be passed. If you pass any resolution to do the buyback, then as per the Companies Act 2013, you should buy back the share within 1 year or 12 months. Because the resolution validity is that, yes. So within 1 year, you need to do off the buyback. So that is the option, daily. Straightforward. Done this again. This question also is, we have done it. Yeah, we'll see how will you remember. Written down value of the machinery, WDV, as on 31st March 2019 is 6,65,000 2019. They've given WDV on 31st March 2019 is 6,65,558 rupees. Depreciation rate is 15%. WDV, you calculate depreciation, we require depreciation rate, which is given to be 15%. What will be the cost of the machinery on 1st April 2014? They are asking you to compute original cost of the machinery on 1st April 2014. Meaning you purchased this machinery on 2014. Currently you are in 31st March 2019. That means from 1st April 2014 to 31st March 2019. How many years? 1st April 2014 to 31st March 2019. 1st April 2014 to 31st March 2015 is 1 year. 31st March 2016 is 2nd year. 31st March 2017 is 3rd year. 31st March 2018 is 4th year. 31st March 2019 is 5th year. So 5 years over. You have already depreciated the asset. You purchased the asset 5 years ago. You have depreciated the asset. After depreciation, its WDV is this much, 65,558. They are asking you how much is original cost. One way to calculate is use options to figure out. Take 15 lakh, calculate depreciation 5 times and see if it comes to 6,65,558. That is one option. But that will take extra time. We know a shortcut method. Remember, top down, bottoms up approach. Top down means they will give you original cost and they will ask you to compute WDV. Or other way around means bottoms up means they will give you WDV and they'll ask you to calculate original cost. If you are going top down approach, then you will multiply by something. If you're going bottoms up, then you will divide, I said. What is that division? Simple funda. If the original cost of the asset is 100, if the original cost of the asset is 100, just 1 minute, when something happened. Okay, if the original cost of the asset is 100, what will be depreciation for first year? Depreciation is 15%, correct? Okay. Depreciation. What is depreciation rate? Depreciation rate is 15%. That means how much will be depreciation? 100 ka 15%, which will be 15. Yes. That means what will be WDV? WDV will be 85. Yes. So simple funda. If 100 rupees is the cost of the asset means WDV will be 85. That means if this is 100% means depreciation will be 15% and WDV will be 85%. Simple funda. They are asking you original cost of the asset. Bottoms up approach. That means you have to divide. Simple funda is take WDV of the asset. 6,65,558. Depreciation rate is how much? 15%. So do this simple kind of funda. 1 minus depreciation rate you do, or else if you don't want to do so much. 1 minus depreciation rate. What is depreciation rate here? 15%, which is 0.15. That means you have to divide by 0.85. How long ago did you buy the asset? 5 years ago. That means you divide 0.85 5 times. Take your calculator. 665,558. 6,65,558. Divide by 0.85. Again divide by 0.85. Again divide by 0.85. Again divide by 0.85. Again divide by 0.85. Divided 5 times. How much are you getting? You're getting 15 lakh. That is nothing but the original cost of the asset. Simple funda. Okay. If they give you WDV and if they ask original cost, bottoms up, then you divide. Same number. 1 minus depreciation rate ka number you divide. If they ask top down approach, meaning if they ask you if they give you original cost and if they ask you the WDV, then you multiply. As simple as that. Meaning if they had given original cost, what is the original cost here? 15 lakh. Suppose if they ask you WDV at the end of 5th year, simple thing you have to do is take 15 lakh, multiply 0.85, same number 5 times. Because they are asking WDV at the end of 5th year, no? So multiply 0.85 5 times. So if you do this, how much are you getting? Check if you want. 15 lakh into 0.85 into 0.85 into 0.85 into 0.85 into 0.85. If you do, you're going to get 6,65,558. That is what they've given in the question. 6,65,558. Yes, that is a simple way to solve off this. There are various ways to do it. Either you can use option method and get the answer, little time consuming. This is lot simpler. Okay, the simple funda is 1 minus depreciation rate. This is, if depreciation rate is 15%, then 1 minus point, express it in whole number. 15% means 0.15. So you will multiply or divide by 0.85. If depreciation rate is 20%, then it will become 1 minus 0.2. Then this number will become 0.8, like that. That's how the calculation works as such. Okay. Next question, question number 20. In G Limited, where there is one whole-time director and 3 part-time directors. In one company, there are 1 whole-time director and 3 part-time directors. The maximum remuneration payable to all these directors are how much? The company has 1 whole-time director, guys, and it has 3 part-time directors. They are saying to all these guys put together, what is the remuneration maximum you can give? You remember we made a chart for managerial remuneration? We discussed. Yes, this is a chart. Let me just show you for a minute there. Yes. If there is one managing director, whole-time director or manager, maximum remuneration the company can pay is 5% of net profits. Yes. This is for one whole-time director, manager or managing director or manager. For part-time directors, meaning for directors who are neither whole-time directors or managing director, maximum remuneration you can pay is 1% of net profit if there is managing director. If there is no managing director, then 3%. In the present case, there is a managing director or whole-time director. So the maximum remuneration you can pay to part-time director is 1%. And to one whole-time director, you can pay a maximum remuneration of 5%. That means what is the maximum remuneration as per this question? To this whole-time director, you can pay a maximum of, to this whole-time director, you can pay a remuneration of 5%. To all the part-times put together, part-time director, you can pay a maximum remuneration of 1%. So to all these guys, the maximum remuneration you can pay is 6%. So that is the answer. Yes. And it's, just all this has been covered in our notes, in our charts like this. Yes. If any of you want to purchase these charts, okay, you can just contact Arivu Pro Academy, or there'll be a link given when we post this video on YouTube. You can access it from there if you want it as such. All these are colored charts. Okay, for each chapter we have charts like the summary charts. Okay, that will be 30 to 40 pages roughly. It'll cover your entire CS syllabus. So there's like summary of everything. So this is just to give you an idea as to how it looks like. Okay, so the answer for this is 6%. Chennai. Next, 21. When the effective capital is 100 crores. Alright, next question. When the effective capital of the company is 100 crore and above, but less than 250 crore, then the maximum remuneration that is payable as per schedule 5 is how much? Okay. And by the company to its managerial person, when this company has no profits. When company has no profit or inadequate profits, we apply schedule 5 and then accordingly calculate remuneration. So this is the schedule 5 ka part. We've already, here it is there. Let me just show you 1 minute. Yeah, here for schedule 5. If the effective capital is negative or up to 5 crore, then maximum remuneration payable is 60 lakh. But here in the question they told effective capital is more than 100 crore but less than 250 crore. In that case, the maximum remuneration you can pay is 120 lakhs. So that means the answer for this question should be, the answer for this particular question should be 120 lakh, which is there in option number C for Chennai. That's the answer for that. Next, every company having a turnover of dash during the immediate preceding year should constitute corporate social responsibility, CSR committee. If the turnover exceeds 1000 crore or more, there were more criteria, right? Just show you those criteria again. Corporate social responsibility, this one. Every company whose turnover exceeds 1000 crores or more, net worth is 500 crores or more, or if the profit is 5 crores or more, they should form CSR committee. Yes. So they asked a question based on this turnover ka limit in our charts. Yes. So the answer should be 1000 crores or more. So that should be Bangalore is the option. Which of the following is not a type of segment as per accounting standard 17? there are two types of segments as per A17. One is geography segments, meaning if risk and reward is driven by the area, then it becomes geography segment. Or another one is business segment. If the risk and reward is driven by the products or service, then we call it business segments. Okay. So business segment, geography segments are the type of segments. Segment also get reported. So even reportable segment word is used in A17. But have you heard about this term industrial segment anywhere in A17? No, that is not used anywhere. So that means this is not a type of segment. So Chennai, that should be the answer. Next, Rishi sir, kindly put yourself on mute if you don't have a question, please. Alright, next, thank you. Equity shareholder of the company who does not have voting, not rights, they're saying voting control. Those shareholders who have control, we call it as holding company. Remember? Those guys who don't have control, we call them as minority interest or also known as non-controlling interest. That's what they're asking here. Who does not have voting control. Meaning, if A Limited has 70% shares in B Limited, then A Limited has control over B. That means 70% of shares of B are held by A Limited. Balance 30% is held by whom? Balance 30% of B Limited are held by others. That others only we call it as what? Minority interest or non-controlling interest. These guys don't have voting control. They have voting rights, but they don't have control. So they're asking what is the name of those guys? The answer should be minority interest or the basically non-controlling interest. So that should be the answer. B for Bangalore should be the answer for that. Minority shareholder basically. Next, H Limited is the holding company of S Limited. During the year 2018-19, bill receivable amounted to 4 lakh. Out of the total bill, okay, let's start with next question. Question number 25. H Limited is the holding company of S Limited. During the year 2018-19, bill receivable amounted to 4 lakhs. Out of which total bill receivable of 5 lakh received from H. We have done this. H Limited and S Limited are doing some transaction in the form of bill receivable, bills payable. Yes. How much is that amounted? They're saying 5 lakh. Or let's read the sentence again. Bill receivable amounted to 4 lakh, out of which bill receivable of 5 lakh was received from S Limited. That means H Limited has a bill receivable, which H Limited has a bill receivable. Amount of that is 5 lakh, which is received from S. That means S is showing this as bills payable. For H, they have to receive the bill from S Limited. So for H, it is bill receivable means for other company, S, it will be bill payable. Amount is how much? 5 lakh, 5 lakh. Okay. We have gone through this in consolidation. When you prepare consolidation, because there is a H is holding company, no? So H has control over S Limited, yes. When you prepare consolidated financial statements, these sort of intercompany transaction like bill receivable, bills payable, debtors, creditors, loan given, loan taken, they will get nullified. Why? Bills receivable is an asset. It will have debit balance. Bills payable is a liability. It has credit balance. Consolidation means you are just adding up to company ka balance sheet. This debit, that credit, when you add, they obviously get nullified. Yes. Okay. So far, I think this is what we understood. That these transactions should get nullified when you prepare consolidated financial statement. Let's see what happened. So 5 lakh received from S Limited. Till here, okay. These were discounted by H Limited and S Limited have endorsed it to its creditors all the bill. Okay, actually it's ulta. For H, it is bills payable. Okay, for S, it is bills receivable. Actually, they're saying it ulta here. Check. This is BP, this is BR. How can I tell that? Check. Received from S Limited were discounted by H Limited and S Limited had endorsed. Actually, they've done a little bit gadbad in the question. No problem. Conceptually, it is fine. So, some endorsement has happened to its creditor. Who has given endorsed? So, out of this bill of 5 lakh, correct? Rather, okay, 4 lakh rupees has been endorsed to its creditors. Somebody who has the bill, right? This bill receivable, they have given it to their creditors. To what extent? 4 lakh rupees. Yes. So now that means this H Limited has to pay. Whom will H Limited pay this 4 lakh rupees now? Whoever has the bill. Who has the bill? 4 lakh rupees ka bill. creditor. Is H Limited and these creditor related parties? Does H Limited have control over this creditor, or H Limited has control only over S Limited? H Limited has control only over S Limited. That means transaction between H Limited and S Limited you need to nullify. Okay. But these 4 lakh bill has already been given to creditors. That means how much bill still S Limited has? 1 lakh. That means what? Intercompany transaction is only how much now? Intercompany transaction is how much? Intercompany transaction meaning bill receivable, bills payable wala transaction. How much is that? It is only worth 5 lakh. Though initially intercompany transaction was 5 lakh, one company out of this 5 lakh, 4 lakh worth of bill they've endorsed it, meaning they've given it off. Endorse means bill receivable is a negotiable instrument, guys. Bill receivable will have a date. Till that date, you can hold it. If you hold it till the maturity date, whoever is holding the bill will get the money. Or if they want, they can get the bill discounted, meaning they can go to a bank, give that bill and bank will give money. That we call it as bill discounted with the bank. Or this bill can be given off to creditors. If you give it off to somebody else, we call it as endorsement. So here out of this 5 lakh bill, 4 lakh is endorsed to creditors. One company has already given it. That means these are not intercompany transaction. As long as the transaction is happening between these two companies, they are intercompany transaction. But this 4 lakh has been given to an outside party. So this and all we cannot cancel. H Limited can't tell creditors, no, hey, we are intercompany transaction, we'll nullify. Does that work like that? Creditor, what will you say? First give me money. Yes. So these are not intercompany transaction. So this you can't cancel. So how much is intercompany transaction? How much bill still S is holding? They're still holding 1 lakh. And whom should we receive 1 lakh from? S Limited, they should receive 1 lakh from whom? H Limited only. That means these are intercompany transactions. So what do you do for that intercompany transaction? 1 lakh. They should get nullified. Check, what are they asking? At the end of the year, the amount of mutual debtor. Mutual debtor mean intercompany transaction is how much? Is it 5 lakh, 4 lakh? Or they've given 8 lakh, 3 lakh, 2 lakh, 1 lakh. How much is mutual company or intercompany transaction? Only 1 lakh. Suppose this endorsement did not happen. Then mutual debts would have been 5 lakh. Rather 5 lakh. The whole thing would have been mutual debts only. But because this endorsement happened, this you have to pay to outsiders. This can't be mutual debtors or mutual transaction or intercompany transaction. Hence we have to write 5 lakh minus 4 lakh, which is equal to 1 lakh. This should be the option. 1 lakh is the answer for question number 25. Next, on 1st April 2019, H Limited purchased 16 lakh equity shares out of 20 lakh equity shares of S. So that means, can we calculate H Limited ka share percentage? H Limited owns 16 lakh shares. Out of how much totally? 20 lakh shares. In 20 lakh, if H Limited owns 16 lakh means, what is their shareholding percentage? H Limited owns 80%. Yes, no? Holding company has about 80%. That means balance 20% is held by whom? Balance 20% guys only, we call it as minority interest. Yes. So if H Limited holds 80% means minority of interest will hold about 20%. This is the first observation. Okay. Next, now check what are they asking. Following information is provided as on 31st March 2009 by S Limited. That is subsidiary company. They have given subsidiary company ka share capital, general reserve, P&L. All these are what? Where will you show it under? All these are shareholders funds. Correct? No? Share capital plus reserves and surplus only. We call it as shareholders funds. Okay. Along this, on 1st April 2019, a machinery of S Limited, meaning subsidiary company ka one machinery, has been revalued. We have learnt as per accounting standard 10. Companies can either follow cost model, or if they want, they can go for revaluation model. It is permitted as per accounting standard 10. So S Limited is going for revaluation model, and they revalued it about 25% above the book value of 12,50,000. Book value is 12,50,000 guys. Okay. So we are doing a revaluation. Is it a revaluation upward movement or downward movement? 25% above the book value. That means this is upward movement. Value of the asset is more. That means this is what? It's a revaluation surplus. Yes, no? It is not a loss. It is a revaluation surplus, meaning profit. Book value of the asset was 12,50,000. Book value of the asset was 12,50,000. You revalued it upwards by how much? By 25%. That means how much is revaluation surplus? 12,50,000 ka 25%, which will be 3,12,500 is your revaluation surplus. Where, or rather, this is revaluation reserve. You can call it as revaluation surplus, or you can call it as revaluation reserve. One and the same. Okay. Where will any reserve come under? Where will you show all the reserves? Under shareholders funds only. Yes. All the reserves in surplus, whether CRR, DRR, revaluation reserve, general reserve, P&L, securities premium, all this you will show under shareholders funds only. Check what are they asking in the problem. The amount of minority interest will be how much? How much will you show as minority interest is what they're asking, guys. Minority interest. Minority interest we have learned. They'll ask first few things. What is that? Minority interest owns about 20%. Yes. They own about 20% equity shares. That means they have 20% right over net assets. If they own 20% shares, means they have right over 20% net assets of S Limited. And there are two ways in which you can calculate net assets. One is asset minus liability route, or net asset is nothing but shareholders funds, correct? Net asset is nothing but shareholders funds. You can either calculate it as asset minus outside liability and calculate net assets, or directly take shareholders funds. That itself becomes your net assets. Here in this problem, have they given assets and liabilities information? No, but they have given shareholders information, meaning all the share capital and reserves and surplus information they have given. Yes, if you add share capital and all the reserves, what are you going to get? Net assets of S Limited. Of those net assets, minority interest has 20% claim. First find out the net assets, multiply it by 20%. You have minority interest ka shares. That's all. So yes, so we're finding net assets under shareholders funds approach. That means we have to first take share capital. How much is share capital they've given in the question? Share capital they've given in the question to be how much? 2 crore rupees. All the numbers are in lakhs, so I'll write this also as 200 lakhs. Okay, 2 crore is nothing but 200 lakhs. So under shareholders funds, you will show share capital plus all the reserves. What is the first reserve you have? You have general reserve. So I'll write GR. How much is general reserve? Just copy it from here. General reserve is 45 lakhs. And then you have profit and loss account. Statement of P&L is nothing but P&L. P&L value is 32 lakhs. That is what they've given here. 32 lakhs is P&L balance. That's all? No. One more reserve we just now got. What is that? There is also a revaluation reserve of 3,12,500. Shareholders funds means all the reserves, guys, including revaluation reserve. Revaluation reserve is 3,12,500. So I'll write it as, okay, we can write in full form only, 3,12,500. So calculate this. What is the total net assets? Total net assets will be how much? 200 lakh plus 45 lakh plus 32 lakhs. If you want this, instead of writing full number, you can just write, if you want, you can write 3.125 lakhs. Okay, because anyway, all the numbers are in lakhs. If you want to write like that, then it will be 200 plus 45 plus 32 plus 3.125 lakhs, which will be 2 lakh or 280.125 lakh is the total net assets of the S Limited. If you want, you can write in full form also, no problem. Add 5 zeros to it, it will become full value. Does total net assets belongs to anybody? No, minority interest owns only 20% of it. So he has right over 20% of this. So calculate 20% of this. How much it will be? So meaning MI ka share, minority, not Mumbai Indians, minority interest. Minority ka share will be 280.125. 280.125 lakh into 20%. If you calculate this, how much you're going to get? It will be 56.025 lakhs. This is the minority interest ka share. That will come in consolidated balance sheet. So total minority share is 56 lakh something. 56.025 lakhs. So option is D, Delhi. That is the one. Okay. That's question number 26. Simple one. We have done enough questions like this. Yeah. Next. H Limited owns 75% in S Limited. So that means H Limited has control. Other information they have given. Share capital they have given. General reserve they have given. P&L they have given. Capital reserve. If you check what is all this. It is shareholders funds. So they've given all these numbers in lakhs. If you add all this, you're going to get shareholders funds. That is nothing but net assets of S Limited, because all this data is pertaining to S Limited only. Okay, next, what have they given? Cost of the investment of S Limited. H Limited, H only, no? Yeah, H Limited has purchased 75% shares of S. If they have to purchase, means they have to pay some money, right? If they've invested. So the cost of the investment they are saying is 162 lakhs. They are saying how much is the cost of control. Another name for cost of control is goodwill. They're asking you to compute goodwill basically. You remember this chart which we did? How do you get cost of control or goodwill? You take cost of investment. Yeah. From cost of investment, what do you have to deduct? Holding company's share of what? Capital and all the pre-acquisition reserves and surplus. Or simply what? Take cost of investment. From that deduct holding company ka share in net assets. Yes. If you are paid, if the number is positive, if you deduct that, if you get a positive number, it's a goodwill. Negative number, if you get, it's a capital reserve. All this we have done. Questions like this. Yeah. Okay, we'll have to just apply that here in this problem. That's all. We'll do it here maybe. So same working note. First, cost of, we are supposed to find out cost of control. Cost of control ka another name is goodwill basically. Cost of control / goodwill they're asking. So to get that, first we have to take cost of investment. How much is cost of investment? Cost of investment. You purchase this investment by paying 162 lakhs. So we have paid 162 lakh for the investments. Okay. Now we just compare investments with what? H Limited ka share in what? H Limited share in net assets of which company? Of the subsidiary company, which is S Limited. And how do you calculate net assets? There are two ways. Either you can go for asset minus outside liability approach or shareholders funds approach. Here in this problem, assets and liability information is missing. So only way we can calculate net asset is through shareholders funds. So add all the share capital and reserves and surplus. Basically, you're going to get what? The net assets. So I'll just add up here only. So share capital is how much? I'll just copy it from here. Share capital is 150 lakhs. Or maybe if you want, I'll write the full form also. Share capital 150 lakhs. Next we have general reserve, which I'll write it as GR. GR is about 25 lakhs. Then we have P&L. P&L given in the question is 35 lakhs. Then we have something known as capital reserves. Every reserve and surplus should be considered. 10. If you add all of this, right? This is shareholders funds. If you add all of this, what are you going to get? The net assets of this company. So I added 150 plus 25 plus 35 plus 10, which is 220 lakhs. This is the total net assets. Yes? Yes, no? This is 220 lakhs. But did this company, this H Limited, they bought 100% shares of this company? Huh? No, they bought only how much? 75% shares. If they buy 75% of the company, means they are right to get, they have a right over 75% of net assets of the company. Total net asset is 220 lakh. H Limited has 75% right over this. That's what we've written as H Limited share in net assets, not total net assets. H Limited share in net assets. Okay. So 220 ka 75% if you calculate it is 165 lakhs. Simple calculation. From this, if you wanted formula, from this deduct 165 lakh. If you're getting a positive number, goodwill. If you're getting a negative number, capital reserve. 162 minus 165, you're getting a negative number. How much negative? 3 lakh. That negative number only we call it as capital reserve. If you want it logically, worth of the company. Net asset means net worth of the company. Net worth of the company is denoted by net assets. The worth of this company, you bought 75% shares, right? The worth of the shares is 165 lakh. But you paid just 162 lakh to get it. Worth is 165, but you were able to purchase these worth at 162. That means you made a profit. The nature of this profit is capital profit. Hence, it gets transferred to capital reserve. That is the logic. If you don't want logic, formula approach. This minus this you do. Positive number goodwill, negative number capital reserve. Whichever works for you. So the answer is capital reserve 3 lakhs. That should be the answer. Same. The previous one and this one was more or less similar. Next, the main purpose of preparing consolidated financial statement. Why do you prepare consolidated financial statement? Consolidated financial statement means you take holding company ka financial statement, to that you add subsidiary ka financial statement, so that you get group ka financial statement. The whole group ka financial statements you'll get. That is the intention of preparing consolidated financial statement, to know the overview or the financial position of the group. So the answer should be to reflect the true and fair view of the position and the profit and loss of the group. To know the whole overall group ka result and financial position, we prepare consolidated financial statement. Hence the answer is Chennai C. Company's audit report CARO 2016 was issued by Ministry of Corporate Affairs of Government of India, MCA. Okay, so B. CARO 2016 is not applicable. If you remember CARO is not applicable for banking companies, insurance company, charitable companies, one-person companies. For all this, CARO is not applicable. We have the chart also. We have written it here. Yes, show you if you want, just in case you've forgotten. Where is CARO? Oh, here. CARO is not applicable for banking companies, insurance company, companies formed for charitable purpose, one-person company, and private companies. But for private companies, there are certain conditions. And some conditions, some 4 conditions we have called out here. So this question they are asking you here. So let's read that question, see what are they trying to ask. Okay, company's audit report is not applicable for what company? Is it applicable for insurance company? No. Is it applicable for company registered for charitable purpose? No. Is it applicable for OPC, one-person company? No. I mean the answer is all of the above. CARO is not applicable. Next, as per section 149 of Companies Act 2013, the paid up capital requirement of non-listed company having at least one woman director. You remember one woman director we had discussed? If unlisted company, if they want to, if this section has to apply, means the paid up capital should be at least 100 crores or more. Option B, Bangalore. If you want, I'll just show you those charts again where we wrote woman director position. Here, as per section 149. That's the reason we wrote the chart. Hence I told you, each and every word of the charts are important because such questions have been asked. If the following company needs to apply at least one woman director, one is all listed companies. If unlisted companies, if they have to apply, if 149 has to apply, means their paid up capital should at least be 100 crore, meaning 100 crores or more, and turnover should be at least 300 crores or more. So they frame the question with respect to paid up capital here. So this question in the chart they're asking, or this phrase. So hence the answer is that one. 100 crores or more. Bangalore is the answer. Next, concept of value added statement. You remember value added statement? In value added statement, what do? You just get value added and value applied. How much value did the company create and how much value was it applied? Value applied, you give it to whom? Basically, how much profit did the company make and for what and all purpose the profit was utilized? Meaning, whom did we, or what share of the profit was given to whom? How much of this value or profit was given to employees? Yes. How much was it given to employees as salary, to government as taxes, to providers of finance as interest? Yes. Retained earnings. That's what your value added statement. You just figure out how much value was generated and how is that value being applied to whom. So they've given various options here. Okay, directly we'll go for this option because I have seen this. Distributed to employees in the form of salary. They've given various options. All looks right, but this looks more comprehensive. Okay. So here they've just given employees and government. Do you prepare value added statement? You show value added only for employees and government? No. You have to show value added for employees, government, providers of finance. Yes, all the things has to be shown. Hence, D should be the right option. Distributed to employees in the form of salaries and wages, to the government in the form of taxes, to financer in the form of interest, to shareholders in the form of dividend, remaining balance in the form of retained earnings. So this much you have to give in value applied. Okay. Other option also it is there, but other options are limited. Hence, this is more comprehensive and that should be the right answer. Delhi mein. The term calls in arrears is shown in balance sheet. Do you show calls in arrears separately? Calls in advance is shown separately on the liability side. What do you do for calls in advance? Or rather, what do you do for calls in arrears? It is deducted from the called up capital. From called up capital, if you deduct calls in arrears, what you're going to get is the paid up capital. Or that's how you get paid up capital. Hence the right option should be C as in Chennai. Okay. At the time of forfeiture of shares, the share capital will be dash. Forfeiture means cancellation. When the company issues shares, share capital will be credited. At the time of cancellation, share capital will be debited. Yes. So at the time of forfeiture, share capital will always be debited at called up value of the shares forfeited. Yes, we have discussed this. Called up value means how much money the company has asked the shareholders to pay. Meaning company would have passed the journal entry only for called up value. Because how much ever a company has asked the shareholders to pay, for that much only they would have passed journal entry. Forfeiture means cancellation, meaning reversal. Whatever you have done, you have to undo. If share capital is credited at called up value, on forfeiture you will also debit at called up value as such. Okay. Hence B should be the right answer. We have done enough number of questions with this journal entry and all. Simply they've just asked one sample scenario. That's it. Okay. Next, loss on reissue of forfeited shares. Remember when you reissue the forfeited shares, there could be some loss. That loss can be equal or exceed share forfeiture. Can the loss exceed share forfeiture account? No. The maximum loss, the maximum loss cannot exceed, the maximum discount that you can give is up to the share forfeited, meaning the discount or loss on reissued cannot exceed share forfeited amount. Or to give it simply, let us say the face value of the share is 10 rupees. One guy ka shares you forfeited because he did not pay. Let's say he paid 7 rupees. He did not pay 3 rupees. Face value of the share was 10. He paid 7 rupees. He did not pay 3 rupees. That's the reason we forfeited his shares. Okay. So after forfeiting, what do? We reissue. Rather, the company will reissue those shares. So what is the maximum discount you can give? Maximum discount on reissue could be how much? It's a simple funda. Shares, right? If company is giving shares means they want to recover face value of the share. Old shareholder has already paid 7. That means in 10, company has already recovered how much? 7 rupees. That means maximum discount you can give how much? 7 rupees. Meaning what could be the reissue price? If you reissue it at 3 rupees, that is good enough. Because old shareholder has already paid 7. If the new guy pays 3 more, 7 plus 3 will be how much? 10 rupees. Correct? So this is the funda of share forfeiture. So check what is the maximum discount. This is the maximum discount. That's what they're asking, right? Okay. Discount is nothing but loss on shares. Correct? How much can this loss? This loss maximum can be 7 rupees. Meaning this loss should not exceed this portion. How much ever previous guy has paid, maximum loss you can give is that much only. It cannot be even a single paisa more than that. This is the maximum discount you can give. If the balance in share forfeiture account is 8, if he has paid 8 rupees means the maximum discount the company can give is 8. Maximum. It could be lesser also, like that. That means the reissue price will be 2 rupees, like this. Hence the right option is the loss on reissue of forfeited shares cannot exceed forfeited amount. It can only be maximum equal to share forfeiture account or forfeited amount. It cannot exceed beyond this. I think same theory question we have done it in share capital when we did also. Next question is also similar. When forfeited shares are originally issued at premium, these shares are issued at premium, the maximum permissible discount, you can issue the shares at face value. Original shares can be given at par or premium, doesn't matter. The maximum discount that you can give, it cannot exceed balance in share forfeiture account. That is a simple thumb rule, because no matter what, company has to recover 10 rupees. So answer for this is also what? The maximum discount cannot exceed the share forfeited account. Meaning maximum should be what? It can be only to the extent of share forfeited account. How much ever balance is there in share forfeiture account, only to that extent you can give discount. Hence this B is the right answer in this particular case. Okay. Z Limited issued 5,000 equity shares of 10 each, meaning the face value is 10. These shares are given at 10 rupees, 10% premium, okay, which is payable on allotment. The premium is collected at allotment stage, they are saying. Awesome. The company received application money of 3 rupees and allotment money was received only on 4,500 shares. Company wants to issue how much totally? 4,500. Or rather, company issued 5,000 shares. But allotment money was only received on 4,500 shares at 4 rupees per share. Application money is 3. Allotment money is 4. They are saying. Okay. The company forfeited because in 5,000 shares, allotment money was only received on 4,500 shares, means on 500 shares, company did not receive allotment money. Hence, the company decided to forfeit those 500 shares for non-payment of allotment money. Yes, they waited, they did not pay, so they forfeited. They are saying at the time of forfeiture, share capital will be what? It will be debited. If so, it will be debited at what value they are asking, guys. We know this. At the time of share forfeiture, share capital will always be debited at what value? You'll write share capital account debit always at called up value. Called up value means what and all money company has asked the shareholders to pay. What money has the company asked the shareholders to pay? Company has asked application money. Yes, company has asked application money. So I'll directly write here only the answer. So is equal to 3 rupees application money they have asked. Okay. Have they asked allotment money? Yes. How much is allotment money? 4. But hang on. These shares are given at 10% premium, no? That means, can you tell me how much is premium here? Calculate 10%, 10%. Because premium, discount, all this is applied on the face value. Yes. So the premium is how much? Premium is equal to 10%, which will be 1. And where did you collect the premium? They said premium is collected at allotment stage. Yes, they said here premium is payable on allotment. What is the total allotment money they're saying? 4 rupees. But that allotment money includes what? 1 rupee premium. Will you show premium as capital or premium will go separately to securities premium account? Capital always shown at face value. Yes. Premium and all will go to securities premium account. That means out of this 4 rupees, if you have to split or if you have to call it, out of this allotment money, total allotment money is 4. Out of this 4 rupees, 3 rupees is towards capital. 1 rupee is towards premium. Yes. Premium will go to securities premium account. This will be transferred to share capital account. So that means towards share capital, how much did you receive? 3 rupees application money, 3 rupees allotment money, 6 rupees on one share. The company has asked the shareholders to pay 6 rupees. 500 people did not pay. So what is the called up value on 500 shares? Because only 500 shares you are cancelling, no? 500 shares you are cancelling. 6 rupees is the called up value per share. Called up value means how much the company has asked the shareholders to pay. Company has asked the shareholders to pay 3 rupees application money. Don't take 4 here because the 4 includes premium and capital. Premium is not shown as capital. Premium is shown separately. Hence I've only considered 3 here. So 6 into 500, if you do, you're going to get 5 or rather 3,000. So share capital will be debited by 3,000 rupees. Check which option has 3,000. Chennai. That is the answer. Okay. Simple as that. They did not ask journal entry. They're just saying share capital will be debited at what value. That's all it is. Simple question. Yeah. Okay. Again, a repetitive question. We have done this with a different number because this question is from study material only. Let's see if you can remember it. Capital structure of KC Limited. Equity share capital is 250 lakhs. Long-term debt is 110 lakh. Bank overdraft is 40 lakhs. They're saying average rate of return for similar type of company is 20%. The return is 20%. Risk-free return is 10%. Rate of interest charged by bank is 18%. They're asking you weighted average cost of capital is how much? You remember the concept? We did something known as economic value added statement. We took one question from study material. Same data was given. Okay. Because to calculate economic value added statement, we require weighted average cost of capital. And I told you also, there is one question which is asked previously, but they're only asking weighted average cost of capital. Okay. Similar to that. How do you calculate that? How do you calculate weighted average cost of capital? First to take capital. What are the types of capital we have? Or maybe I'll have the columns first. Capital. And we'll have the amount of capital here. Then we'll have expected return. expected return. Okay, these are the three columns we'll have. First, we have three types. Economic value added statement means what are the source of finance we need to consider. What and all source of finance? Don't be misled by the term capital, or instead of capital, if I write capital, you'll only consider share capital. Instead of capital, write source of finance, better. Economic value added considers all source of finance. What is the source of finance? Or from where and all has the company raised money? Under three sources. First source is equity share capital. So how much is equity share capital? I'll write that as ESC. How much is equity share capital? 250 lakhs. All the numbers are in lakhs, okay? So I'll write as lakhs. Next, the company has taken what next? They have taken a long-term debt. That is also another type of finance, right? Long-term debt. How much is long-term debt? 110 lakhs. So all the numbers are in lakhs. So I'm just writing 110. Another one is bank overdraft. I told you few books don't consider bank overdraft because bank overdraft is a short-term finance. Normally for economic value added, we take long-term finances. Hence, majority of the books don't take it. But I told you our study material, ICSI study material considers this. Hence, we will also do it like that only. So hence here we will consider bank overdraft. Meaning all the sources of, the finance you take, whether short-term or long-term doesn't matter, you take everything. So how much is bank overdraft? It is 40 lakhs. This is the capital or total source of finance. Can you give me the total? Can you give me the total? 250 plus 110 plus 40. It will be 400 lakhs is the total capital or total source of finance. If you have taken source of finance from somebody, somebody will expect some return. Yes, no. If equity shareholders have given you 250 lakhs, they will expect some dividend. Long-term debt means bank loan, debentures and all. If you have taken debentures means debenture holders will expect interest. On bank overdraft, bank people will expect interest. That only I'm calling it as expected return. How much the providers of finance are expecting. Let's calculate that. They have given totally 250 lakhs as equity share capital. Check. Have they given expected return of equity shareholders? Here they have given rate of return on similar type of company is 20%. So take this 20% as return on equity. They should have clarified this more, okay? But as in the study material also same question was there. Hence we solved it like this only. So we're going with the flow. Actually they should have given cost of equity in the problem. They should have either given CAPM data or some dividend data to calculate. In finance management you would have calculated capital asset pricing model. That is one method to calculate cost of equity. Or you can use Gordon's growth model or model you can use and get cost of equity. They must have given some data. Here data is not given. Hence we assume that this 20% itself is cost of equity. Meaning shareholders are expecting 20%. So 250 ka 20% will be, somebody is answering 50 lakh. Awesome. So 50 lakh is the expectation of equity shareholders. Similarly, long-term debt. How much is long-term debt? 110 lakhs. Have they given long-term debt ka how much is cost of, how much is a return percentage? They have not given. But they have given risk-free rate is 10%. Again, I told you I don't agree with the solution of study material. I had given you RBI example, remember? I'll just reiterate that just to be sure. Okay. Maybe I'll write it here. Let's say RBI, they've issued a bonds. That bonds carry 10% interest rate. And let's say A Limited, they have issued debentures. These debentures also they have given it 10%. An investor, let's say, has 1 lakh rupees with him. Where do you think he will invest? He will invest in RBI, which is giving a return of 10%. Or he will invest in A Limited, some company, which is also giving 10%. Where do you think you'll invest? Or where do you think any investor would invest? They would obviously prefer RBI because this is risk-free. Correct? No? Risk-free return. If you're investing in RBI, government securities, risk is lesser, no sir. But if you invest in companies, here there is more risk. Yes. There is more risky. What if company defaults? What if company is डूब गई? Yes. If company goes bankrupt, there is a possibility. That means RBI is a risk-free return. But here there is a lot of risk. If there is more risk means what will the investor expect? They will expect more return. This interest should not be 10%. This should be at least 12, 13 or 14%. Then only investors will think about investing. Yes, I told you this. But our study material in this question, what have they done? For long-term debt, they have taken risk-free rate of return. there in a study material we've seen. I told I don't agree with that, but this question is from that only. So to get the answer, we have to solve like this only. And we don't have overriding powers over institute books, guys. Whatever institute book says, whether it is right or wrong, we have to follow it. Unless they amend it, unless they change, you have to follow it. That is the only drawback. Okay, this may not be right. This question is actually not that right. But still we have to solve it like that only to get the marks. That is one disadvantage, but we have to go with the flow there. Okay. So long-term debt ka interest rate is 10% here they have given. Take 10%. Capital is 110 lakh. 110 lakh ka 10% is 11 lakh. Now bank overdraft is 40 lakhs. Yes. How much is bank charging the interest? That has been clearly given, which is 18%. Yes. So this is 18%. 40 lakh ka 18%. How much will this be? 7.2 lakhs. That means what is the total return which the providers of finance are expecting? 50 plus 11 plus 7.2, which is 68.2 lakh is what they're expecting. So you didn't do one step only. In the class you are done. Yes, in the class, if you remember, we had not taken it like this. We would have multiplied it as 0.6. Yes. Why we multiplied by 0.6? Because tax rate in that problem was 40%. Check here, is there any tax rate given in the problem? In the study material problem, 40% was the tax rate. Interest is charge against profit. Meaning if there is any interest, tax will come down. Hence, we have to take after tax interest. Hence, we used to multiply. If tax rate is 40%, we used to multiply by 0.6. We have done this in that question. But here we have not done because tax rate is not given in the problem. That is the difference between this problem and study material problem. If you compare, you'll get to know this. Okay. So how do you get weighted average cost of capital? This is nothing but total expected return, which is 68.2 lakhs. Rather, 68.2 lakh is the return the finance people are expecting. How much finance they have given? For 400 lakhs. On 400 lakhs, they are expecting a return of 68.2 lakhs. That means what is that return percentage? 68.2 divided by 400 into 100 if you do, you're going to get 17.05%. So weighted average cost of capital is an average expectation of the shareholders. Okay. So that is what 17.05, which is D. That's how they have derived this answer. Little debatable this solution. Okay. I personally don't agree with this, but as I told you, I don't have overriding power over study material. Whatever they give, we have to follow it. For the marks, you will also do it like this only. You will not change. I don't agree, especially with this aspect. And also this, in fact, no data is given. Nonetheless, have to go with it here. No choice there. Okay. The difference between total market value and capital invested is what? Market value added. Yes, no. How do you get market value added? MVA. MVA is nothing but total market value minus book value. Market value of equity minus book value of equity. That difference is nothing but market value of equity. Yes, that's what we have written. So this is nothing but market value added. So which is Chennai. C. Next, 40. Pooja Limited had an investment of 68 lakh rupees. Okay, they've given some data. Okay, let's incorporate this in ledger. It will be better. I'll tell you why am I doing this ledger. Pooja Limited, we'll do investment ledger as it is. Pooja Limited had an investment of 68 lakh as on 31st March 2018 and 81 lakh investment as on 31st March 2019. They've given 31st March 2018. 31st March 2018 means previous year ka closing balance. Why have they given that? Because previous year ka closing balance becomes current year ka opening balance. Indirectly they're saying opening balance of investment. Opening balance of investment comes on debit side, right? This debit side, this credit side. Opening balance of investment is how much? 68 lakh. That is previous year ka closing balance. And they've also given closing balance of investment, which is by balance carried down. As on 31st March 2019, you check how much is that? 81 lakh. So opening and closing balance of investment they have given. During the year, company sold some investment. What percentage? 30% of original investment they've sold. What is original investment? 68 lakh. So that means, can you calculate sale value? 68 lakh is the original investment. Did we sell 100% of this? No, we sold only 30% of this. Yes. Investment will be shown at cost price. Yes. So 68 lakh rupees is the cost of the investment. And 30% of it we have sold. Yes, but check here. These investments are sold at a profit of 9,60,000. So if you do 68 lakh into 30%, what are you going to get? Cost of the investment sold. But what have I written here? We require the sale value. How do you get sale value? Cost plus, 1 minute, just draw a line here, may lead to a little confusion. Cost plus, how do you get sale value guys? Cost plus profit is your sale value. Yes. How much is the profit? You sold 30% of the investment and made a profit of 9,60,000. That means what is the profit you made? 68 lakh into 30% plus 9,60,000. If you do, this final number will be, after adding everything, you're going to get 30 lakh rupees. You have sold the investment for 30 lakh rupees. Okay. Easy. 68 lakh is the cost of the investment. 30% of this you have sold. You have sold at a profit of 9,60,000. Hence you have added. If it was loss, I would have subtracted it. So what is the journal entry for sale of investment? Bank account debit to investment account. Yes. So that means in my investment account, what will I write? By bank account, which is 30 lakhs. But when I sold this investment, I have made a profit. Where does profit on loss or profit on sale of investment come? The debit side. We have already proved this. Yes. Why we show it also, I have told you. To profit on sale of investment. If it is loss on sale, it will come here. By loss on sale. Loss and profit both will be transferred to P&L. Here it is not a loss on sale. Since I'm leaving it as blank. Here we made a profit on sale. How much is the profit on sale? 9,60,000. So these are the data they have given. Okay. Check the requirements. The cash inflow and the cash outflow from investment will be how much? If you purchase investment in cash flow statement, you will show this as investment activity, correct? Both purchase of investment and sale of investment. Both are investment activity. When you purchase the investment, cash will go out. When you sell the investment, cash will come in. So that's what they're asking. How much is cash inflow and cash outflow? Sale value is nothing but what? When you sell, cash is going to come in. What did you sell? Investment only. That means this is cash inflow. We got this already. Cash outflow we need to find out. Have they given that? No. I told you in cash flow statement, in these sort of things, some components they will give. One component you have to get it as balancing figure. Check opening balance they've given. Every data they've given. That means account should match. Tally it. 30 plus 81 lakh is how much? 81 plus 30. This side should be 111 lakh. Ledger means this side total also should be 111 only. But total, are you getting 100 lakh? Check. 68 lakhs plus 9,60,000. If you add this, you're only getting 77,60,000. That means there is some balancing figure here. How much is that balancing figure? 111 lakh minus this, which will be 33 lakh 40,000. You're getting a balancing figure of 33 lakh 40,000 here. Now what can come on this side? You check. Only in investment account, what can come on debit side? What is the journal entry for investment purchased? Investment account debit to cash or bank? Yes. So that they had not given. This we have to ascertain it as a balancing figure. That's the reason I prepared investment account. When you prepare account, it's easier. You can also do it as statement plus minus. But account wise, it's easier. Because we have practice of posting things. So hence I always prefer to do this as a ledger. So when you purchase investments, it is cash outflow. So cash outflow is 33 lakh 40,000. When you sell, it is cash inflow. Cash inflow is 30. Select that option which has 30 and 33.4. 30 and 33. Check the wordings also. Okay, sometimes they interchange. First they've asked cash inflow. How much is cash inflow? Cash inflow is 30 lakhs. So that means this. And then they've asked cash outflow. Cash outflow is not even this, no? 30 lakh and 33.4 lakhs. So that means it is D. Option D, Delhi. 30 lakh and 33.4 lakh. Sometimes they will interchange also. So don't, in a hurry, don't select this guys. See, this is cheap. Little bit. Okay, if you select this also, thinking it's the same, but check the order. They've asked first cash inflow and then outflow. Inflow is 30. Outflow is 33.4. So that means option should be Delhi, not B. Bangalore is not the right option. If you select B and come, gone, marks gone. Okay, so just watch out. Again, MCQ questions, you should pay a little attention to these sort of things. Okay, next. During the year 2018-19, company redeemed 10% debentures of 8 lakh at 10% premium. Okay, if they are redeeming the debentures means issue of debentures, redemption of debentures. All these are what? If company issues any debentures, it's a source of finance. So when you're preparing cash flow statement, issue of debentures and redemption of debentures and interest paid on those debentures, all are what activity? Financing activity. Okay. So here you have redeemed the debentures. Can you tell me what is the redemption value? Redemption value means how much you are repaying. 8 lakh is the worth of the debenture you are redeeming. Yes. But 8 lakh is the face value of the debenture. Whenever they give the value, you should always take it as a face value. But these debentures, are you redeeming it at par? No, you are redeeming it at 10% premium. That means you are giving 10% extra. How much extra are you giving? 10%. So that means totally you are paying 8,80,000. That is your redemption value. Redemption value is cash. What is this? When you redeem, company has to pay the cash. That means this is cash inflow or outflow. This will be cash outflow. Done. Okay, next. Let's see what they're asking next. And after some time, this we'll call it as option A. Just we'll call it as 1 maybe. After some time, a fresh issue was made for new 10% debentures of 7,50,000. They cancelled some debentures. They redeemed some debentures. After that, they issued some debentures, sir. Some new debentures. The company, or you can write issue of new debentures. Issue of new debentures. New debentures ka value is how much? 7,50,000. That 7,50,000 is the face value. Was the new debentures given at par? No, they were given at premium. How much premium? 25%. Premium discount. All this and all is calculated on face value itself. The value of the new debenture is 7,50,000, but these were issued at 25% premium. That means how much money company got? Because when the company issues the new debentures, company is going to receive the money. So totally they have received 9,37,500. That means what is this? This is cash inflow. On one transaction, company paid, so cash outflow. On another transaction, company is receiving, so it's an inflow. So check what are they asking. The net cash flow from debenture. The net number is how much? Net means after adjusting both, how much is the net cash flow? Net cash flow. Company received 9,37,500. So we'll write this as positive. Company redeemed debentures. That means they have to pay the money. So this is outflow. Yes. So inflow will show it as plus. Outflow will show it as minus. So 9,37,500 minus 8,80,000 you do. You're getting how much? 57,500. Meaning on one hand company received 937. On another hand they're paying 880. That means net inflow is how much? Net inflow or net cash flow is only 57,500. That's what they asked. Net cash. So this is what? Net cash inflow or outflow? This is net cash inflow or outflow? This is net cash inflow. Why? The issue value is higher. Okay. Because this is higher, no? If outflow value is higher means I would have written net cash outflow. So this is 57,500 net cash inflow. Always watch out for that also. So option should be net cash inflow 57,500. See, Chennai should be the right option there. So this is about 41. Next. In case of financial enterprise means the banks and all, SBI, remember? Cash flows that arises from interest paid. For a financial enterprise like SBI, banking, NBFC and all, interest paid, interest received, investment purchased, investment sold, all these are part of their main operation. So any cash related to main operation you'll show under what activity? Under operating activity. So answer should be A. If it was not a financial enterprise, if this was a non-financial enterprise, or if it was not a financial enterprise, then interest paid would come under financing activity. Okay. Since this was financial enterprise, interest paid, interest received, all these are part of their main operations. Hence, it will come under operating activity. So A should be the right answer. Same. We have done all this in a class notes. It is there any which way. Next. Balance in provision for taxation was on 1st April 2018, meaning opening balance they have given. Opening balance of provision for taxation and on 31st March 2019. 31st March 2019 means closing balance. Opening balance was 13,72,000. Closing balance is 14,55,000. During the year, 12 lakh 5,000 was paid towards income tax. Amount of provision made for taxation is how much? You remember in the chart, I'll show you the chart. One moment. This one. You remember cash flow statement? Maybe we did this chart. I told this will be helpful later on. This is what they're saying. I told you. There are 4 components. 3 components they're going to give. One component they're going to ask as a balancing figure. One component will be missing, which you have to get it as balancing figure. See in this problem. Opening balance they have given. Closing balance they have given. Tax paid they have given. But provision for taxes not given. That means this you have to get it as balancing figure. So this one they are asking in the question. That's all. That's the reason I just made this all this in the class there. Okay. So we'll just draft the provision for taxation ledger again here. Provision for taxation account. Provision for taxation. Sir, any provision has provision as a liability, sir. Where will you write liability ka opening balance? Liability ka opening balance. All liability like share capital, creditors and all opening balance you'll write it on the credit side only, no? So how much is opening balance of provision they've given? 13 lakh 72,000. So opening balance is 13 lakh 72,000. Similarly, they have also given closing balance of provision. To balance carried down. How much is the closing balance they have given? 14 lakh 55,000. Then they have given 12 lakh 5,000 was paid during the year. When you make a provision, what is the journal entry for tax paid? What's the journal entry for creditors paid? Creditors to cash. What is the journal entry for tax paid? Provision for taxation to cash or bank. How much did you pay? 12 lakh 5,000. So that will come on this side. They are asking you how much provision you made for taxation in the current year. Journal entry for any provision is what? Provision is a charge against profit. Because of provision, profit will reduce. So the journal entry for any provision, not only for tax, any provision is P&L account debit to provision for taxation. So when you post that into ledger, what are you going to get? You'll get by P&L. This is not given in the problem, which you have to get it as balancing figure. That's all. This side total you do 12 lakh 5,000. 12 lakh 5,000 plus 14 lakh 55,000, which is 26 lakh 60,000 you're getting. This side also should be 26 lakh 60,000 only. But this side total is only 13 lakh 72,000. So that means how much is balancing figure? Balancing figure is 12 lakh 82,000. That is the provision that your provision for taxation that you're making in the current year. Provision means estimated amount of tax. Every year company needs to estimate tax and then they will pay. I've explained to you in logic how it works. I mean fully. So answer is 12 lakh 88,000, which is B as in Bangalore. Okay. Plant whose original cost of the plant is 1 lakh 35,500, sir. Accumulated depreciation, meaning so far you have charged depreciation of 70 to 800 from original cost. If you deduct accumulated depreciation, which is 70 to 800, what are you going to get? From the original cost, if you go on deducting depreciation, what are you going to get is the written down value or book value of the asset or the carrying amount of the asset. Check. 1,35,500. 1,35,500 minus 70 to 800 if you do, you're going to get 62,700. That is the written down value or book value or carrying amount of the asset. These are 3 ways in which you can call it. So far, this is what we made out of this problem. Now check what happened. These plant was sold at a profit of 5,900 during the current year. You have sold this asset at a profit. They are asking how much is the amount of cash flow. When you sell, you're going to get cash, right? They're asking you how much cash did you receive. You have sold this asset. This is the cost of the asset. Did you sell it at profit or did you sell it at loss? They told here you sold it at profit. So how do you get, this is a cost value. If they give you cost and if they give you profit, how do you get sale value? You take book value, to that what do you add? You add the profit. Just now we did the same, no? For investment. So add 15,900 profit. Because cost is 62,700. You sold this at 5,900 profit, means the sale value is 78,600. Meaning you have sold this plant at 78,600. Hence you have made 5,900 profit. That is what they've asked. Because cash flow means the total selling price you receive. The total selling price you have received is 78,600. So option is D as in Delhi should be the right option for this question. Next, Mithu Limited had an investment as on 31st March 2018 and 31st March 2019. Why have they given 31st March 2018? That is last year ka closing balance, no? Last year ka closing is this year ka opening, that's all. Same investment account. Maybe we'll do it here again. Let's see what happens. As in when we read, no, it's a good practice to draft it off in ledger so that you don't have to read the question and again. Hence, I'm not reading the question. As in when I'm reading, I'm posting it. So that you can also inculcate that habit. Because if you read it fully sometimes, yeah, okay, I mean, anyway, I know that this is what they're asking. Quickly read it once and then start, like as in when we read the adjustment, jot it down into the ledgers on your working note. It'll be easier. You'll get the answer a little quicker. So they've given investment account to opening and closing balance. Where will investment account to opening balance come? On the debit side, yes. So I'll call this as, I'll write debit here. What is opening balance? Opening balance of investment was 10 lakh, this one, 10 lakh 95,000. Similarly, what is the closing balance of investment? Closing balance will come on the other side. By balance carried down. On 31st March 2019, how much is its balance? 31st March 2019, 10 lakh 82,000. So closing balance is 10 lakh 82,000. Okay. During the year, interest on investment has been received. If you have an investment means obviously you will receive interest. So what is the journal entry for interest received? Journal entry, its interest is an income. What is the journal entry for income received? Cash or bank account debit to income account. Here the income is interest. So you'll write bank account debit to interest received account, which is 77,000. Okay. Fine. So this will not affect your investment ledger because the journal entry is bank and interest. That's a component. So it will not affect investment ledger. So I'll not bring in. Yes. Let's read it a little carefully. Interest received is 77,000. Check, this word is important. Which was used in writing down the book value of investment. You have written off or written down the book value of investment. Writing down means in accounts you are reducing the value of assets. For assets, when you instead of saying asset value has been reduced, we use the term written down. If they're saying asset value written down, what are they trying to say is asset ka value has been reduced. That's what they're trying to say. Which has been used means what? The 77,000. Indirectly they're telling we have written off the investment to the extent of 77,000. We have reduced the cost of the investment by 77,000. Why? Maybe we followed accounting standard 13. You remember as per AS 13, how should the short-term investment be valued at? Short-term investment should be valued at cost or market price, whichever is lower. Yes, if the cost is greater than the market price, then we have to write down the machinery, write down the investments. Maybe we followed that, but we don't have to go into all that stuff. They said write down. Write down means asset value has been reduced. Assets have what balance? Debit balance. How do you write it down? How do you write down or how do you bring the ledger balance down when the ledger has debit balance? When a particular ledger has debit balance, how do you reduce its value? By crediting. Yes, that means you have to debit something. Write down means you are reducing value of the investment means it's a loss. Where will the loss go to? P&L. That means what is the journal entry to write down the investments? Journal entry is P&L account debit to investment account. Because you have to credit investment because its value has to be reduced, right? Since it's a loss, this loss will be transferred off to P&L. How much are you writing it down? 77,000. Are you preparing investment ledger? Yes. So what will be the posting of this entry? On this side, you'll write by profit and loss account 77,000. Okay. Next, see what they're having. If there was some purchase of investment, meaning company has purchased some investment, then cash flow from investment and from interest is how much? Interest we know already. Cash flow from interest is how much? 77,000. That is not a problem. Investment purchase they are saying. Have they told at what value investment is purchased? Not given. Missing. That's the reason we did a ledger. Ledger ka opening balance given. Ledger ka closing balance is given. Ideally it should match. If all the values have been put into the ledger balance should match. Check. 77,000 plus 10,82,000. How much are you getting? 77,000 plus 10 lakh 82,000 if you do. Yeah. 11 lakh 59,000 this side. That side also should be 11 lakh 59,000 only because you have not sold any investment. They told investment is purchased. What is the journal entry for investment purchase, guys? Investment account debit to cash or bank account. Have they given that? No, that has to be arrived as balancing figure. Total this side should be 11 lakh 59,000. But the value that side is only 10 lakh 95,000. That means what is the balancing figure? 64,000 is the balancing figure. Yes, basically 11 lakh 59,000 minus 10 lakh 95,000. That is the balancing figure. 64,000. Your purchased investment worth 64,000. That is what they asked. So the option should be, they first asked was, again check the order in which they are asking. They asked cash flow from investment. How much is cash flow from investment? You purchase investment, how much? 64,000. Interest is 77,000. So means answer should be cash. Okay, here order is not important here. They have given inflow and outflow. Okay. Cash inflow is 77,000. Why? This 77,000 was interest received. When you receive interest, it is cash inflow. When you purchase investment, it is cash outflow. How much is cash outflow? Meaning purchase value 64,000. So cash inflow is 77,000. Cash outflow is 64,000. That should be the option, which is C for Chennai. That is the answer to that particular question. All these are cash flow questions now. Next, from the following information were provided by the trading company. They have given net profit after tax. Then they have given depreciation. And then if you just check, they have given goodwill data, provision for tax, income tax. Okay, stop there. Once you read 2-3 lines, no, directly go what is the requirement. How to read the question I'm telling. Read 2-3 lines and straight away dive into the last line. Check what are they asking. They are asking what is cash flow from operating activity. Cash flow statement mein, there are 3 headers, nahin? Operating activity, investing activity, financing activity. They are asking net cash flow from operating activity here. We know as per accounting standard 3, to find operating cash flow, there are 2 methods. One is direct method, another one is indirect method. Direct method means whatever is a cash flow related to operating activity, like cash purchase, cash sales, cash received from debtors, cash paid to creditors, expense paid. All this data should be given to you in the question. If all these informations are missing, but if they give you profit information, then automatically it is an indication that we have to use indirect method. Yes, under indirect method you remember first thing we did is operating we did a chart. How to find operating cash flow? Here, check indirect method. What do we take? We take net profit before tax. Sometimes they give net profit before tax, sometimes they give net profit after tax. Doesn't matter. They give profit before tax, take it. From this non-cash expense you have to add. The examples of non-cash expense are depreciation, amortization, foreign exchange loss. If there is non-operating expense like interest paid, loss on sale of asset or loss on sale of investment, we add back. If there is non-operating income like interest received, dividend received, profit on sale of asset, etc., you need to deduct. Yes. After that, we have to consider working capital changes. Then we have to consider extraordinary items. Then we have to consider tax paid. Finally, you will get operating cash flow. I've told you the logic of each of these components, right? Why do we plus or minus all that? Okay, so now just coming back to this question. They have given that. They're asking operating cash flow. But they've given profit information. How much is profit they've given? We'll take this number. Net profit given is 18 lakh 35,000. I'll just directly write the value here, okay? 18 lakh 35,000. Some adjustments they've given. First, they've given depreciation. What do we need to do for depreciation? Depreciation means we need to add. How much is the depreciation? 1 lakh 8,000. Why do we need to add depreciation? Because it is non-cash expense. Cash did not go out, but profit has been reduced. The simple funda of indirect method is using profit, you're trying to find operating cash flow. Using profit as a base, you're trying to find operating cash flow. Because depreciation is an expense, your profit has been reduced. So if your profit is reduced, your operating cash also has been reduced. Why? From profit only, you're trying to find operating cash. Hence, so if profit is reduced, operating cash is also reduced. But depreciation is non-cash expenditure, meaning cash did not go out because of this depreciation. That means unnecessarily operating cash has been reduced. Hence, what do? Add back. That is the logic of adding non-cash expense. Fine. Okay, after depreciation, they've given goodwill. One intangible asset they've written off. Again, these are non-cash expense. Add back. So add 50,000. Next, they've given provision for taxation. We just now discussed. What is the journal entry to make any provision, we told. Journal entry is P&L account debit to respective provision. Here it is provision for tax. Hence, the journal entry will be P&L account debit to provision for taxation. P&L, if it's profit, means P&L account will have a credit balance. If you have debited, means profit has been reduced. We are preparing cash flow statements. Hence, we are only interested in tax paid. We are not interested in provision for tax. Provision for tax means tax estimated. But for cash flow statement, we require tax paid. But they have given provision for tax. And this provision for tax has already been deducted because P&L has been debited. Hence, what do we need to do? It's already been deducted. Hence, add back provision for taxation because profit has been reduced because of this entry. If profit is reduced, your operating cash is also reduced. But this is not tax paid. This is only tax estimated. Hence, cash did not go out. Hence, we add back. Next, they give income tax paid. We are preparing cash flow statement. So, income tax paid is required for me. When you pay income tax, cash outflow, income tax paid is shown under operating activity only. Yes, when you pay income tax, cash goes out. And all outflows in cash flow statement, how do you denote? If it is cash inflow, you show it as positive number. If it is cash outflow, you denote it as negative number. That means income tax paid, I have to deduct 4,80,000. Next, interest on investment credited. Credited means you have credited P&L account. That's what they're saying. Interest on investment credited to P&L account. Meaning interest income you have transferred to P&L. If you transfer an income to P&L balance will increase. But why do you receive interest? This is interest on investment. Because you purchased investment, you are receiving interest. Purchase of investment is what activity? Investment activity. That means interest received on investment also is what activity? Investing activity. But are we finding out investing cash flow or only operating cash flow? We're finding operating cash flow. But all incomes are transferred to P&L. Yes, all income expense will be transferred to P&L. Meaning this income is also transferred to P&L. That means because of this income, profit has increased. But is this an operating activity or is this an investment activity or investing activity? This is an investing activity. But because this income was transferred to P&L balance is increased. If P&L balance is increased means your operating cash balance also has increased. But since this is non-operating activity or rather this is investing activity, we have to minus this 25,000. Right? Last thing is dividend paid. Dividend paid will not come in P&L account. Dividend paid comes in P&L appropriation account. So this will not have been deducted. So any dividend adjustment if they give you in cash flow statement, ignore it. You don't have to worry about that. Just ignore it. So when you do plus minus of all this, they have not given working capital changes. If they had given working capital changes, it would have become a little more full-fledged problem. Working capital changes is missing here. So this itself will be your operating cash flow. Operating cash flow. Plus minus you do. How much you're going to get? 18,35,000 plus 1,08,000 plus 50,000 plus 5,50,000 minus 4,80,000 minus 25,000. If you do, you're going to get 20,38,000. So 20,38,000 you're getting as positive number. So that is operating cash flow. Check 20,38,000 which is Bengaluru. Option B, Bangalore. That's the answer for this. Accounting Standard Board, ASB. It is set up by ICI, correct? We discussed this. In what year was it set up? It was set up in 1977. You got to remember all these dates, guys. Could be a little tricky. There are enough things to remember, but these questions they are asking. This is a previous year paper only, yeah. So you got to remember these sort of things. No other go. So B, Bangalore is the right answer. Which of the following section of Companies Act 2013 is required that the auditor has to report whether in his opinion financial statements comply with accounting standard? Auditor has to tell whether accounting standards has been complied by that company. That is section 143 subsection 3 clause E. So Chennai. This is the answer. 143 subsection 3 clause E. That is the answer. Next one. Which of the following is not included? Underline that word, not included, in the conditions specified by small and medium companies. Yes. With reference to applicability of accounting standard. If you remember, we had done a chart on applicability of accounting standards. I will show you that. This one. Remember? Okay, in this we had discussed SMC. SMC means small and medium companies. For you to call a company as small and medium companies, one, their shares or their debt securities should not be listed in stock exchange, whether in India or abroad, or it should not be in the process of listing. That is the first condition. Second condition, it should not be a bank or financial institutions or an insurance company. 3, turnover should be lesser than or equal to 50 crores. Pay attention to this word, 50 crores. Borrowing should be lesser than or equal to 10 crore. If these are satisfied, then we call a company as small and medium companies. If it is SMC, means certain relaxations have been given. We discussed that. Yes, from some accounting standards, they don't have to follow. Now this question they are saying here, which of the following is not included, stress in the word not included, in the conditions. We just now saw the conditions. They are saying which of these options is not a condition for SMC. 1. Company is not a holding or subsidiary of non-SMC. Yes, this is a condition. Meaning, if your holding company is not an SMC, then if holding company is not an SMC means subsidiary also cannot be SMC, like that. One company is not an if one company is not an SMC means other company is also not an SMC. Meaning, if holding is not SMC, subsidiary is also not SMC. If subsidiary is not SMC means holding is also not SMC. That way they have given the condition. Next, company is not a bank or financial institution. Yes, this is also one condition. Stress the word turnover. Turnover, what is the limit? 50 crore. Check what have they given here. Turnover should not exceed 10 crore. Turnover should not exceed what? 50 crore for SMC. That means this is not a condition. Turnover condition is there, no doubt. But value, is it correct? Turnover value is 50 crore. But they have given it as 10 crore. That means this is not the right option. Okay. This option is also correct. Equity or debt securities are not listed. SMC ka equity or debt should not be listed. That is one of the condition. This was also condition, but amount is wrong. Turnover should be 50 crore here. 50 crore or lesser, not 10 crore or lesser. So amount is wrong. Hence, this 49 should be Chennai. C. Which of the following international accounting standard, IAS, is related to EPS? It is IAS 33. IAS 33 talks about earnings per share. We have discussed earning per share. Two types of earnings per shares are there. Basic EPS and diluted EPS. Yes. If it is IAS, I told you the trick to remember. IAS 33 becomes IND AS 33. IAS and IND AS ka number are same. But IFRS and IND AS ka number is 100 more. If IFRS is, a small trick to remember is, I've told you this in the class itself. If it is IFRS 113, or if it is IFRS 13 rather, if any standard is IFRS 13, then in IND AS it will become IND AS 113. 100 you have to add. Okay, that's how IND AS is numbered. IAS and IND AS ka number match. IFRS and IND AS ka number is 100 more. 13 becomes 113. 14 becomes 114, like that. So here they've asked IAS. Maybe in your attempt they can also give IND AS also, possible. That's the reason I thought I'll mention this. So IND AS option is C, Chennai. Next one, which one of the following institute formerly was established as a registered company? That is ICWA, guys. It was established as a company before. So you got to remember them, that's all. 51 is C. Institute of Chartered Accountants of India is the second largest chartered accountant body in India, in the world rather. ICI is the second largest body with respect to chartered accountants. That is B, by Bengaluru. The Association of International Certified Public Accountants was launched by D, both AICPA and SEMA. Because AICPA and SEMA has now formed a tie-up. Okay, hence D should be the right answer. 53 is D, Delhi. Mandatorily applicable of IND AS. We just now discussed the roadmap of IND AS. For normal companies, Voluntarily, they can start from 1st April 2015. But if you are a listed company, if your net worth is more than 500 crore, then from 1st April 2016. If you are an unlisted company, but still if your net worth is more than 500 crore, then also 1st April 2016. That's for company. Okay. For that is phase 1. Phase 2 is for all listed companies and those unlisted companies whose net worth is more than 250 crore. They have to start from 1st April 2017. Banks, I told 1st April 2018. NBFC also 1st April 2018. Insurance company 1st April 2021. I shared the document which had all the roadmaps. Remember? Class notes had that. That's what they are asking here. Mandatory applicable of Ind AS of all banks, NBFC and insurance company is 1st April 2018. Actually, insurance company it is wrong because for insurance company it is 1st April 2021. Even banks they have pushed it, but they have not amended the study material. That is fine. So you select this. For NBFC banks and all, it is 1st April 2018. So you will select this. For insurance company, this is wrong, however. For insurance company, it is 1st April 2021. They pushed it. No worries. You can ignore that and select this as the right option. Compulsorily, those companies have to apply Ind AS from this particular date. They don't have any choice for that. Next all theory questions, guys. 5 minutes, it'll get over. I know, must be like, you have sat from a long period of time. You must be waiting. When? Yeah. Another 5 minutes, that's all, over. Which of the following Ind AS is related to consolidated financial statement? Which Ind AS talks about consolidated financial statement? AS 21 talks about consolidated financial statement and Ind AS 110 talks about consolidated financial statement. So it should be B, Bengaluru. Okay, AS 21 and Ind AS 110, they address consolidated financial statement. Next one, a simplified financial statement which shows how much wealth has been created by the company is value added statement. Value added statement gives you how much value has been added and how much value has been applied. Okay, that is that statement. There could be debate here also. Some could interpret wealth to be P&L also and select statement of P&L also. But in our guided answer, they've given value added statement. So let's just go with that flow there. Next. Following is not an advantage of double entry system. Which is not an advantage they're asking. It prevents and minimizes fraud. That is an advantage, no? Helps in decision making. That is also an advantage. Trial balance does not disclose all types of errors. If trial balance does not disclose all type of errors, is it an advantage? No, it is not an advantage. So that means C, Chennai is the answer. 57 is C. It becomes easy for government to calculate tax. Yes, that is also an advantage only. So C, Chennai is the option there. As per Companies Act 2013, the prescribed form of balance sheet is talked where? Part 1 of Schedule 3 deals with balance sheet. Part 2 of Schedule 3 deals with P&L. They've asked balance sheet or P&L? They've asked balance sheet. That means the answer is Part 1 of Schedule 3. If they had asked P&L, then the right answer would have been Part 2 of Schedule 3. Since balance sheet is, so Part 1 B is the answer. Corporate Social Responsibility CSR Committee should consist of how many directors? It should at least consist of 3 directors. And among 3 directors, at least 1 director should be independent director. We discussed this provision in the chart also. We have written this. CSR committee should consist of at least 3 or more directors. At least 3 directors, meaning 3 or more. And among them, at least 1 should be an independent director. So that means the option is D, Delhi. Financial Reporting Council, FRC, is an organization in which country? In which country is it located? It is located in UK. So the right option. I've shared you that file. That file has all this. I told you in the chapter number 12. All you have to remember is full forms of the various accounting bodies, which year it is established, where it is situated. That's all you have to remember. So I've given you all this document for you. One question has come from that angle here. So this is situated in UK. So these are the 60 questions. One moment. Okay, these are the 60 questions with respect to corporate accounting. Alright, remaining questions are on the costing and valuation side. So with this, corporate accounting questions have been fully solved as such. Yes, we took a lot of time. Alright, so but since we were doing it, don't worry. Since we took a lot of time does not mean you will also take so much time. In examination, obviously, you will speed up the process. That will always be there. Okay. But now, since I was explaining and doing, we took a little extra time, that's all. Okay, but do practice. Take the questions and keep practicing so that you improve the speed. And I've told you how to go about answering it. First, always, if you just check, if you literally count in this 60 question, at least 37 to 38 questions are theory driven. If you count, in fact, I once counted more or less 40. 40 marks is straightforward theory. Balance 20 questions only practically they are asking. Practical questions, no doubt, will take some more time, because 40 questions is straightforward, we can answer. No, in 10 seconds maybe we can answer. So practical questions will be little tricky, maybe a little lengthier also. One of the two, or maybe both. So hence, first do those questions which you are comfortable. Always manage the time, guys. Simple thumb rule: a minute, not more than a minute for one question. Keep it like that. Okay. For theory, it should be a lot lesser. Okay. So keep it and work it out. Always manage the time. So do write some paper so that you get used to it. Because all these are not really that tough examination. These are time management examination. You should be able to answer so much of the things within that stipulated 3 hours. So as long as you manage the time, you can easily clear as such. All right. So with this, we have completed all of our syllabus. It was a pleasure sharing my thoughts with you guys. Wish you all the very best. In case you have any doubt, you can always post it on Arivo Proka app. Okay. Thank you so much. Take care.